Good afternoon and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. It is I, your host Q, coming to you yet again from my mother's basement, and I'm joined by my co-host P. How goes it out in Nashville?
As always, it goes fantastically. I'm excited. It's great to have Caitlin with us.
I'm very excited. I wanna give you the honor of introducing our special guest today, someone that I've been looking forward to speaking to for quite some time. P, take it away.
Amazing. Well, Caitlin is the founder and CEO of Custodia Bank and Trust. Recently changed the name. You are a 22-year Wall Street veteran. You led the charge in terms of making Wyoming one of the Bitcoin capitals of the United States. You've spearheaded a ton of different projects in terms of delivering market index data to Vanguard. You are chairman and president of Symbiont.
Used to be.
Used to be. Okay.
Yeah.
You ran, correct me if I'm wrong, you ran Morgan Stanley's pension solutions business for almost 10 years. And you were at Credit Suisse. You were at Salomon Brothers. You've done an incredible amount of stuff, both from a professional perspective, but also in the Bitcoin space. Thank you so much.
Not
for
done
joining.
yet. Yeah, thank
Absolutely,
you. My pleasure
absolutely.
to be here. Yeah, got a lot more to do.
Yeah,
for sure.
You're one of the pillars.
Caitlin, I'd love to just hear from your mouth. Like, a lot of us really admire the work that you've done, both within Bitcoin and the work you did before. But what are you most proud of? What is the work that you really hang your hat on at the end of the day?
Oh gosh, there's so much, but my passion is creating a fair and stable financial system, and everything that I'm doing professionally, and so much that I'm doing personally in my charitable work too, is aimed at that. I don't believe that the current financial system is fair or stable, and I do believe that these technologies, specifically Bitcoin itself, are going to give us a fairer and more stable financial system. And so that's the guiding star. Some of the things that I experienced on Wall Street just hit me in the gut, that mom and pop were having their pockets picked without even knowing it. And it was just morally wrong. And I set about to help fix that. And this is part of the reason how I ended up in Bitcoin relatively early.
Can you tell us a little bit more about that? Like, what was your journey to Bitcoin, and how did you come to realize the things that you just mentioned?
Oh gosh, well, it started with the financial crisis actually in 2008. I got very curious, and it was a contradiction that I heard between the Treasury Secretary Geithner in two different interviews just a few weeks apart. And in one interview, he said interest rates had been too low. I think it was on Charlie Rose's show. He conceded interest rates had been too low, and that caused the financial crisis. But then in a separate interview, just a couple weeks later, he was saying he was trying to encourage the Fed to drop interest rates further still. And that just it just was a logical inconsistency. And that got me digging. And I went on a big intellectual journey of curiosity on different schools of economic thought, and literally explored the gamut, including MMT, and of course Austrian school economics, and everything in between. And there's nothing that I think that I subscribe, nothing that I subscribe to in its entirety, because we know there are issues with lots of different schools of economic thought. But it was through that journey that I started to see this thing called Bitcoin. It was definitely by 2012. And I finally took a deep dive into it in 2013, and started buying it right before Gox and learned a really important lesson. And I think a lot of your listeners are probably, I think we are in crypto winter. I think we're in that down part of the 4-year cycle. I'm not one of these folks who believes that the 4-year cycles in Bitcoin are gone. No, they're here. They're permanent. And this is how Bitcoin works. And it's a feature, not a bug. But we're in the crypto winter part of that cycle right now. And I sat through that for a couple years with big losses on my Bitcoin back then. And I'm very glad that I just stuck it out back then. And it forced me to really just learn a lot of important lessons, like not your keys, not your coins. And also to really just dig into the ethos of it and boy, I liked what I saw when I think back to that guiding North Star, which is the financial system should be fair and stable. And this is, I think, going to be a part of what that fair and stable system is ultimately going to look like.
What a concept. The financial system should be fair and stable. That seems like it's crazy to me that is a revolutionary perspective.
Well, and a lot of folks probably, if you're not core Bitcoiners, are probably thinking, how on earth are you saying Bitcoin's stable? Because the price, of course, relative to the US dollar isn't stable. Relative to most fiat currencies, it's not stable. And it will be over time. It is, of course, stable relative to itself. One Bitcoin equals one Bitcoin. But here's my broader point. It's the stability of the system, the stability of the network. I have a far greater degree of confidence in the stability of the network itself relative to the stability of the traditional financial system, because it is band-aided together. It's based on old technology. We see it break down. And to me, the engineers are the most important people in Bitcoin, always have been, always will be. And the folks that are able to essentially, last I looked, we're approaching 6 sigma of network uptime. And you know, that's considering they never take the code down, never take the network down, right? There's no network administrator. They don't take it down to do software upgrades, right? That all happens so carefully and happens while the network is still operating. All of those things are tremendous attributes of the network. And I point to me a single centralized institution that has 6 sigma network uptime over this long a period of time. It's an incredible piece of software. And again, the core devs are the ones, and of course, Satoshi, who gets credit for that.
Yeah, I feel like that doesn't get enough. The Bitcoin network does not get enough credit for that fact. It is a truly remarkable thing that it is as stable and consistent as it has been. And
for sure. Well, and a lot of folks are here for, certainly when we get into the bull part of the cycle, it does attract a lot of folks that are in it for the speculation. And that's fine. But most speculators end up going down the rabbit hole and then sticking around. And let's hope that that's indeed the case this time. There are always a lot of people who in the bear cycle end up underwater, just like I did in that first cycle. This is my 3rd cycle of Bitcoin. So I'm used to the bear markets, but they're painful. And a lot of folks, I'm sure, are licking wounds from that. And I sure hope that a lot of folks, although I do fear that even more folks got caught in the leverage games this time. And they're subject to the leverage flushes that have happened and I think are still to come. But all of that is healthy. And those of us who are hodlers are not, we didn't play those games. And I think it's so important for us to speak out that those short-term, leverage-based players, as all of that leverage is flushed out of the system, this is a good thing, in spite of the fact that it's certainly painful for some people. But boy, we had a lot of leverage in this market, and good riddance to it, in my humble opinion.
Caitlin, do you anticipate, as more and more money gets flowed into Bitcoin, that these leverage positions will not necessarily be the majority of positions, or do you think there'll be even more leverage coming into the market for the next bull run?
Well, Bitcoin hasn't itself, the intermediaries in Bitcoin haven't really been regulated this time. And I think next time there will be more regulation, right? We just saw Senators Lummis and Gillibrand introduce their bill today. And the intermediaries are registered. They're registered with FinCEN, but registered with FinCEN does not mean regulated. And they're licensed in most cases as money transmitters. That also does not mean regulated. Just because they have registrations or licenses does not mean regulated. Regulated means you've got regulators examining you, you've got capital requirements, you've got compliance requirements, and all of that is coming. And so I think there will be a lot less cruft, a lot less scams, a lot less of the crazy leverage. I mean, let's look at it. There have been, and in fact, in some cases still are, exchanges that are offering 125 to 1 levered futures offshore. those are the kinds of things that would never be allowed onshore. The futures exchanges can lever up to, last I look, around 2.5 times. So 125 times offshore, 2.5 times onshore. Well, there's a reason why they're limited to those lower leverage numbers onshore. And in part, it's because the real users of those futures contracts are those who are naturally hedging. And naturally hedging, boy, you don't need that kind of leverage at all. And so I think it's interesting to ask, and we've seen some of the CEOs of those exchanges who have been offering these crazy high levered contracts, even 20-to-1 contracts. A couple of them came down from 125-to-1 to 20-to-1, but that's still almost 10 times what's available onshore. Right. And I this is the kind of stuff that causes the crackdown, the regulatory crackdown, and it's coming for sure. And I think those on Capitol Hill who are supporters of this industry are trying to do it responsibly and do it in a way that enables the good behavior and cracks down hard on the bad behavior.
I used to joke that. Go ahead, Q.
You can tell your joke, P.
It's not that good, but I'm going to tell it anyway. I feel like when the leverage is that high, it's like when you get margin called, it's like they travel back in time and margin call your grandparents and then liquidate them so you're never born, and then take all the Bitcoin that you would have ever earned over that entire period of time, and then they just goes to the coffers.
Yeah, it's if they could, they would. Let's put it that way. Yeah, I think there will be when we look back on this, a lot of examination of what actually happened. How come these big fortunes were built up so fast on these crazy leverage contracts that never would have been allowed onshore? And what's the ethics of allowing those contracts, of those offering those contracts, right? Because if you look at the math, right, and a lot of us are Bitcoiners who are Bitcoiners are pretty good at math. So start to actually look at the payoff probabilities of those contracts, even at a 20-to-1 leveraged futures contract. You're looking at situations where the house wins a vast majority of the time. Certainly on the 100, 125-to-1 contracts, the house wins 99+% of the time. Just go do the math, right? Now think back to 1950s Vegas when the mob was in charge. I think the mob would have loved to have been able to offer contracts that had 99-to-1 odds where the house wins, right? And yet it's happening in the Bitcoin world. And this is not core Bitcoin, folks. That's folks with very high time preference. Very low time preference. Folks that are very short-term oriented, looking to make the quick buck. And that's not what the Bitcoin world is. And it always does confuse the folks that are brought in during the bull market because they think the speculation is Bitcoin. No, it's not. The network is Bitcoin. And as I like to say, the price of Bitcoin is the least interesting thing about Bitcoin. It's the network. It's what you can do with it. It's how it's being scaled. Those are the best things about Bitcoin. And I just don't talk that much about the price. It's the least interesting thing. And if you're a hodler, then you just watch it from a distance and it doesn't matter. Exactly.
I heard everything you said, Caitlin. I have nothing but the utmost respect for you and the work you do.
Here it comes.
Uh-oh.
And then I'm going to ask some price questions because you brought up this 4-year cycle. And I kind of side with you, though. I do actually believe that the 4-year cycle is not dead. I do think that what it looks like in each 4-year iteration may look different. But I do think there is validity in the having cycles, introducing a decreased amount of supply, while at the same time you're onboarding more and more users. I'm curious what you're looking at. What are the things you're paying attention to that helps you draw that conclusion that the 4-year cycle is not dead?
Oh, it's the inflation rate. It is the stock to flow. I know that's a little bit of a controversial model in
sacrilege.
But and some people for whom I have tremendous respect don't believe that it works, but I do, and that is because that's how commodities are valued. And I do believe Bitcoin is a commodity. Money itself is a good that it's a commodity that ultimately becomes a good that's used as a medium of exchange over time. And so it's a commodity, and its stock to flow really matters. I think that is what gives it value. And I think a lot of the reason why folks have shied away from that model recently is that it didn't work to call the peak. And so the interesting question is, if you posit that it's not defunct, because of course the stock to flow does change every 4 years in Bitcoin, that is a fact. And then look at, why didn't it call the peak this time? Who cut the top off the peak? And does that mean that the model doesn't work? The answer is all the derivatives, all that leverage cut the top off the peak. And it doesn't mean the model doesn't work. It just means that the derivatives had control of the price in the short term and cut the top off the peak. It'll be interesting to see if it cut the bottom off the valley as well. But ultimately, the derivatives bring even more volatility to the market, and we've seen that the short-term volatility from all this, margin stop outs. When we see big stop outs, that short-term volatility is a lot higher than it used to be before we had a lot of derivatives in Bitcoin. And as you guys know, derivatives didn't start to come into Bitcoin until the end of the last cycle. And so we really didn't. We had pure non-derivatives influenced cycles in the prior two, but this is a cycle that's been very driven by the derivatives. And as a result, the stock to flow model hasn't performed as well. That doesn't mean it's defunct, not at all. It just means that that it's kind of like the efficient markets hypothesis. A lot of people have thrown that model out as well because it doesn't seem to describe the stock market. Well, we don't have a free market in interest rates. And if you look at the efficient markets hypothesis, it does assume that there's a free market in interest rates. And when you don't have a free market in interest rates, it doesn't mean the model's bad. It just means that the model's not working until you have a free market in interest rates. And I think the same is true with Bitcoin. Stock to flow isn't bad. It is just not working as well as it used to, and won't again until we flush all the derivatives leverage out of the market. And that could take years.
There's a saying in data analysis that's garbage in, garbage out. And it sounds exactly like what you just described there, Caitlin. We're putting garbage into the system. We're putting garbage, data analysis, whatever we want to call it. And in turn, we're getting really shitty results. I'm listening to you and I'm curious, and I swear to you, last price question, then we're going to switch to more regulatory stuff. Do you think that the derivatives capped the upside of Bitcoin during this most recent bull run that, for all intents and purposes, we all believe on this call that it has ended?
Yes, that's exactly what I think. It cut the cap, it cut the top, because all the leverage. So here's why, right? A lot of people think that because the Bitcoin protocol precludes more than 21 million Bitcoins from being created. In fact, Jameson Lopp likes to point out it's not ever going to be exactly 21 million, right? It actually stops right below 21 million. So fair point. But anyway, there won't be more than 21 million. And yet, if you added up all of the Bitcoin IOUs in all the different intermediaries, it's far more than 21 million. One of the problems is no one knows because there's no reporting, there's no transparency, but I guarantee, because you actually see some of the intermediaries admit they rehypothecate. What does that mean? It means they're creating multiple claims to the same Bitcoin, multiple IOUs for the very same Bitcoin, right? So we don't know how many claims to Bitcoin in exchanges and custodians exist. And if we knew what the precise number was, then we would see, I guarantee, we would see that it's greater than the I think we're at 19.2 million now of Bitcoins mined. And so the actual, the real supply is far less than the IOU version, right? And that, so basically fractional reserving crept into Bitcoin through all these derivatives and lending platforms. Okay, so I think that's a given. I think most people wouldn't quibble with that. The question, though, is why does that necessarily mean the price of real on-chain, the 19.2 million Bitcoins, is somehow suppressed? How did it cut the top off? And the answer is there are people who don't understand the distinction between a Bitcoin IOU, which is everything you own at an intermediary. your exchange, your custodian, your derivatives platform, when you send them your Bitcoin, they give you an IOU back. It's not real Bitcoin. The only Bitcoin you own directly is the Bitcoin that you self-custody. And so what happens when those intermediaries satisfy real demand with supply that they created out of thin air? What's happening, if you think back to your supply demand curves in your economics class, anytime the supply curve gets pushed out to the right, what happens if you hold demand constant? The price drops. Just go do your little supply demand curves. You'll see the price drops when the supply curve goes out, pushes out to the side for whatever reason, whether it's legit or not. You actually see the supply curve go out to the right, price drops. Okay, so what that means is people are having their pockets picked. They think that they're getting real on-chain Bitcoin. They're not, and your counterparties don't necessarily have one Bitcoin for every one Bitcoin IOU that they've offered you. And that's the piece that we don't know. And this bull market, so much leverage crept into that. We've already seen some failures. It's been in DeFi, but each of the prior bull cycles that turned to a bear cycle ended up revealing exchange insolvencies. And I'm pretty sure that there are exchange insolvencies that just haven't been revealed yet because of all this leverage. There is no lender of last resort. I consider that a feature, not a bug. But the only way you benefit from that lender of last resort is if you self-custody your Bitcoin. If you're holding it in an intermediary, then you've lent it to a leveraged intermediary that may or may not have it. We look at the collapse of GOX in, I think it was 2014, and yeah, it was early 2014, right? And then Quadriga was the collapse in this previous bull cycle, and now we're now getting into the bear cycle here. I think we're already there, and we're starting to see some balance sheet stress at some of the intermediaries. And I do predict that there will be an intermediary failure. Past this prologue, history does rhyme, and there's a reason why the intermediaries failed. They were running fractional, and it wasn't clear to the world that they were running fractional until they hit the wall. And then you realize just how fractional they were running. They were insolvent. And that happens in these bull to bear cycles. And, I wish it didn't, because unfortunately, we should have a lot more people hodling and self-custodying and learning that lesson. But I'm one of those who had to learn the lesson the hard way by losing Bitcoins in Mt. Gox. And boy, did I consider that cheap tuition, because I dug in and finally figured out how to self-custody, and it made a big difference.
I think that's such a good point. And I wonder, you've mentioned regulation a couple of times. Do you think that regulation is going to help fix that problem?
Yeah, it will, because most of the intermediaries want to be regulated. They're all going at, many of them are going after the big mainstream pools of money. And the big mainstream pools of money can only deal with regulated intermediaries. They're fiduciaries for their customers. I'm talking about 401k plans, corporate treasurers. Those are the really big pools of money, and they're not going to touch an unregulated player. And they're probably almost likely never going to get involved in true DeFi yet either. They're not prepared operationally to self-custody. So I think we will see more of that over time. And we can talk a little bit more about why in a moment, but we're just not there yet. Most most folks actually don't self-custody their Bitcoins. And unfortunately, many have to learn the lesson the hard way. Unfortunately, again, if there's one thing that your listeners take away, it's go educate yourself. There's no substitute for just digging in and learning. There's so much available now that there wasn't for me 2 cycles ago, when I'm not an engineer, and it was intimidating for me to try to figure this out. It is hard. But I like the way Andreas talks about it. When, especially in emerging markets, when people have all of their net worth tied up in this, they generally figure out how to secure it. And it's the analogy to what our ancestors used when they had gold, or they had money stashed in a mattress. They figured out how to secure it. It wasn't always foolproof, but they did a pretty darn good job. They didn't just default to storing it in a custodian.
As you said, history may not repeat, but it rhymes. And the bank runs that will turn into exchange runs and the fractional reserve currency system that we're seeing replicated is honest. It makes me laugh at the stupidity of some people. If you do not have a wallet, just go to bitcoinmagazine.com, the store. We sell cold cards there. Buy it. Just do it already. There are videos all across the internet for you to actually be able to like follow step by step of how to set it up. It's so easy now. There's no excuse. All right, my mini tangent is over. I wanted to talk now to you, Caitlin, about what we're seeing come out of Senator Lummis's office, this new crypto bill that's being pushed forward. It seems at first glance very similar to the legislation that was passed in the state of Wyoming. And I'd love for you maybe to set the stage between these two bills.
Well, I took a look at it this morning. It's been a work in progress. I've seen different drafts of it, as most of us in the industry have, over the last few months. And boy, has it changed a lot, and it's gotten a lot better. And I think it has an opportunity to get even better. But I think it strikes the right balance. It goes after some of the scams and market manipulation that we know is happening, and that's healthy. But it does so in an enabling way. And I hope that it can continue to be refined and improved and get passed. We all need to recognize that Washington moves very slowly, and this is going to take some time. So your question, though, about some of the elements of Wyoming ending up in there, that's not an accident, because two of the people who were heavily involved in the Wyoming blockchain bills in 2018, 2019 are working for Senator Lummis right now. And so a lot of the research that the state of Wyoming did back then, of course, did influence what they ended up writing at a federal level. So all that work that Wyoming did, which, by the way, the Bitcoin industry was pretty actively involved in helping the state of Wyoming understand what's the right way to think about this. How do we do this in an enabling way without restricting it and sending it all offshore? That did, some of those themes do show up in the bill for sure.
I'm curious, just off the bat, one of the biggest red flags on this bill for me personally was there seems to be an out for any sort of alternative cryptocurrency, shitcoin as we like to call them on this show, to essentially have an out and find a way to be categorized as a commodity. I'm curious if you think that this is an acceptable measure, or if this is something that could get taken advantage of.
Well, I saw that this morning, actually. That was one of the big things that jumped out at me when I looked at the version that got released, that the default is that it's a commodity, and the SEC essentially gets the burden of proof to prove that it's a security. But the Howey test is enshrined in the bill. So I think the SEC would probably say a lot of those things are securities. And of course, the SEC has used its enforcement action against a lot of them already. But I've said this before, surprisingly, the SEC has actually been pretty hands-off, because I think there are a lot of things out there that they could have gone after that they haven't yet. They do work slowly. And so oftentimes it takes 2 or 3 years before you'll see the SEC take action. And they certainly have gone after some of the bigger scams, but they haven't gone after them fast enough, in my humble opinion. They did actually subpoena Terra Luna back in December of last year. I don't know if you guys were aware of that. But needless to say, that's ultimately, I think it's a good thing that the registration requirements are a little lessened. And that gets down to just how expensive it is and how cumbersome it is to do securities offerings. And there are a lot of folks who've been criticizing this for a long time. And we've had the crowdfunding rules, but the crowdfunding rules haven't really worked, because most securities lawyers will tell you there's still a lot of risk in using those crowdfunding rules. And so I'm hoping that some of those get addressed, because it isn't fair that only the richest Americans can partake in private securities offerings. And so striking a better balance between the way securities offerings work now and the way that they've proposed them, from what I saw this morning in that bill, is I think a healthy thing. But we'll have to watch that debate because the SEC, I'm sure, I don't know if they've weighed in yet or not, but I'm sure they will.
There was another just component of this where the SEC's relationship with the CFTC is getting further, I think, described in relation to cryptocurrencies in general. There's a little caveat, though, that I haven't seen anyone else up in arms about this, but you know me, I like to react and then I'll calm down. So there's a new tax that's going to be introduced. And I'm not talking about the capital gains $200 cap. No, there's a tax that the CFTC is going to pass along to exchanges that begin to list commodities, i.e. if an altcoin gets listed as a commodity now, this exchange, i.e. Coinbase, potentially has to pay a tax. But historically speaking, no business out of the goodness or kindness of their heart has ever, we'll cover the tax for our users. No, there's a reason why you pay sales tax every single time you go to a grocery store. I'm curious if this is the beginning of a very slippery slope where we start to see just different taxation around cryptocurrency in general.
Well, again, they don't tax the Bitcoin protocol itself. You know, core peer-to-peer Bitcoin isn't what this bill would be after. What they're doing is not unusual vis-a-vis financial services regulation, because it's the regulatees that pay the fees to cover the budget for the regulator. And that's what it is, from what I can tell. Yeah. Is it a slippery slope? Yeah, I get your point. But even the Wyoming special purpose depository institutions have that. There's a fee paid. You can call it a fee or a tax, whatever it is. It's money that comes out of the special purpose depository institutions that goes to the Wyoming Division of Banking to cover their expenses as the supervisor. And then any excess, right now it doesn't tip over into Wyoming's general fund, but over time, as that grows, I suspect that the legislators will grab it, right? Because over time, if it grows the way I think it's going to grow, there'll be a lot of excess funds sitting in the regulator's budget. So, but that's what it is. They're trying to basically pay to staff up the CFTC to be able to be the regulator. What do you get if you're an exchange in exchange for registering with or licensing and being regulated? Remember those three differences I talked about at the beginning. Register with FinCEN. Right now, you're money transmitter license, but you're not regulated. Here, this is basically a regulation. You're agreeing to be regulated by the CFTC. What does that mean? I think it's the kind of thing, again, you get access to the mainstream money that's fiduciary and has to deal with only regulated financial institutions. But the other piece is you get some capital to back you up. Right now, the money transmitters don't have capital. They just have reserves. And in fact, some of the largest intermediaries in this industry that have publicly disclosed their finances have negative capital. That always blows my mind as someone coming from the financial services world, which has always had to have a certain capital requirement. And then, you know, you see in the crypto industry, some of the big players have negative capital. So when this world comes to be, they're going to have to raise capital, and there will be capital to back the obligations of the exchange. So, you know, again, there are pros and cons to all this, but what you get in exchange for being regulated and having those capital requirements and being examined is you get access to the mainstream money. And that's what many are going after. Some won't bother. Some will just go offshore. Some in DeFi will try to just keep dodging. And Gabe Shapiro put out an interesting thread today. He talks a lot about DeFi law. And he basically said, look, some of this stuff is just not enforceable against the DeFi, decentralized exchanges, the DEXs, because there isn't anybody to register and there isn't a human being involved with them, and they don't have listing requirements. And so some of that stuff, they're not going to be able to be enforcing them. It's just something that has to play out over time. But I think most of the big money will be in the centralized exchanges, and they will get registered. And as a result, one of the big things that probably will drop out of this, which, as you guys know, I've said is a double-edged sword, is that once you get some of the market manipulation out of the exchanges, I think the SEC will finally approve an ETF. But it seems to me that the SEC's made that very clear, that they're not approving a Bitcoin ETF until there's a market manipulation cop on the beat. And the Lummis-Gillibrand bill proposes that market manipulation cop on the beat be the CFTC.
So one thing I want to ask about is, I mean, you have done an incredible job of working within the legislative system in Wyoming and broader. I have this profound distrust of the effectiveness of regulation in general, because I feel like it is likely to sort of be taken advantage of, even with the best of intentions, which is what, the work that you've been doing. It feels like eventually people will find ways to use that to their advantage. And so I'm curious, for me, part of it is when we're talking about having like the idea you mentioned earlier, kind of the idea of a free market and how that's kind of an illusion in a lot of these situations. How do you sort of square that circle, or where do you come in on the idea that ultimately Bitcoin creates these incentives that should drive a free market versus regulations and protections for investors?
Well, you raise a very good point, which is that regulators often get captured by their regulatees and end up basically becoming enforcers of the status quo and block new innovations and block out new entrants that might be doing things a little bit differently. And that's just the nature of regulation. It's very interesting to see how, I mean, I'm living that, right? It's very interesting to see how things have evolved because the states in the United States, and I know this is a global show, but for the non-US folks, the US has 50 different state regulators, and then it's got a federal regulator. And in the insurance system, all the regulation is done by the 50 states individually. In the banking system, there's something called a dual banking system, where you can either be a state chartered bank or a federally chartered bank. They all can do the same things. So they have what's called parity. And then the broker dealers, it's all done federally. So that's a confusing thing. Oh, by the way, money transmitters, it's also done state by state, all 50 states. So all this gets confusing for non-Americans. But here's the punchline as it relates to the question you just asked. The state financial services regulators, in almost all cases, have in their mission statement economic development. So they're going to be more open to innovation because it's part of their mission to not be a gatekeeper that keeps all the new entrants and all the innovators out. But the federal regulators, none of them, to my knowledge, have economic development in their mission at all. So what ends up happening is that they do become gatekeepers that tend to keep innovators out and tend to reinforce the status quo. That is the nature of the systems that were created. Now, Congress could change that. It could create an economic development or innovation remit as part of the mission of the regulators, but it hasn't done so. And I don't recall whether the Lummis-Gillibrand bill includes something like that, but keep in mind, it's open for comment. They want comments. This is not the final version. It's just the first version they've released for discussion. And so that is one thing that may make sense, is especially if the CFTC becomes the regulator of the Bitcoin spot markets, make sure that it's got an innovation remit as part of its mission, as opposed to just basically enforcing the existing laws, because that's when industries tend to become insular. And what I just described, by the way, is not unique to financial services. I think all the regulated industries, it happens that way. The cynical way to talk about it is the phrase regulatory capture. But again, I don't think the regulators necessarily intend to always reinforce the status quo in their regulation. What they're doing is responding to the system that Congress set up for them in the first place. And I do think the states have a better system because they have in their mission statement a requirement to think about economic development.
Interesting. So it sounds like you feel like the regulatory systems that are in place can be used to affect positive change And that's the kind of the direction that we should be going, or using a balance of that and kind of incentivizing these, holding your own keys and these free market systems. That's the way to go, rather than kind of leaning all in on trying to just sort of having a system that requires like radical personal financial responsibility.
Well, I think that's right. But by the way, those two can coexist, right?
Absolutely,
Because you can own Bitcoin and you can self-custody, right? You can memorize your seed phrase and not even have it written down anywhere, and no one can prove that you have it, right? Because it's in your head. So you could, it is a system that where you can own your own Bitcoin and understand where it is at all times based upon that, as opposed to having to do business with an intermediary. But once you start getting into the intermediary world, that's when the regulations start to come into play. And also, very importantly, anytime a US dollar is involved, every US dollar ultimately has to clear through the Federal Reserve. It's fiat currency.
Absolutely.
It goes through the Fed, whether directly or indirectly. And so, of course, it's going to be regulated. None of us should expect that this is not going to be regulated. But one of the things I like about Bitcoin is that you have the option not to have to store it at a centralized exchange. You have the option to self-custody it. You have the option to go peer-to-peer. Is it as easy as if you were using a centralized platform? No, it's not. But no one will ever be able to take that option away, right? Because you can memorize your seed phrase. And that's a really important point. It can be, you can opt out of the system. That's not true of fiat systems. And that's a powerful concept. And especially in countries where the leaders are despots, that it is a real force for human freedom. It is a force to devolve power back to the individual. And I think that's a really healthy thing. And what I'm laying out for you is that there's a nice tension between the truly decentralized users of Bitcoin, who only transact on chain and who self-custody, versus the centralized users who are going to be dealing with regulators. And that creates a nice tension, that the fact that you can opt out keeps the centralized system honest.
Love it.
Caitlin, I want to present a question to you. It's a little bit more maybe philosophical, but do you genuinely believe in the future, when Bitcoin is generally accepted by the world, that everyone will understand the nuances and the little details of how to operate on chain? Or will it kind of adhere to a similar system that we have with our cars or the internet? Like, a majority of people don't really know what happens when you press the start or turn your ignition.
That's a great question. I do think most people, there are a lot more people will learn. To Andreas's point, when you've got your whole net worth stored in this, you're going to educate yourself, and anyone in the world who's got an internet connection is capable of educating yourself on this. You just have to spend the time. And ironically, it's people, I think, in emerging markets that, especially in economies where there has been hyperinflation recently or in the process of, that's where people are going to be more incentivized to learn it. So more people will learn it over time. But I'm also a realist that a lot of people just are afraid of technology, especially there are demographic, I'm talking about generational demographics here. There are demographic differences that, some folks, their VCR is still flashing 12 o'clock, right? They never learned how to get comfortable with the latest technology. And of course, that's old technology I'm talking about, but that's what I'm alluding to, that some folks, I think, are just so intimidated by technology that it's not easy. And so we'll never get to the point where it's 100%. That's my sense. There will always be service providers. That's why you haven't seen me be so anti-bank in my the way I talk about the industry, because banks themselves are not illegitimate. It's some of the things the banks do that are illegitimate sometimes, with some of the fractional solvency games that are played, the leverage games that are played. But that doesn't mean they don't provide a valuable service. And even when we didn't have fractional reserve banking, the money warehouses were service providers. They provided a service of storing people's gold or valuables. And that's what I've always thought a custodian should be. That's what a bank should be, a money warehouse, a service provider, not a counterparty. And that is part of the ethos of the Wyoming legislation. And like you said, some of those elements did end up in the Lummis-Gillibrand bill, which made me happy.
I want to give you the opportunity, Caitlin. With one sweep of your pen, you can make anything into law around Bitcoin, of course. What would that change be?
Oh boy. The first thing that comes to mind is the most foundational, which is that Bitcoin needs to be backwards compatible with the legal system, because Bitcoin doesn't exist in a vacuum. Everywhere in the world, there are laws, unless you go on to, a seasteading, create a new island or something like that, right? Everywhere in the world, laws already exist. And so that means that the judicial system could be an attack vector on your Bitcoin. And you could have a judge say, for example, in a divorce settlement, you could have a judge create an order to force you to send your Bitcoin to your ex-spouse, for example. Those things are very real. And what we need is a roadmap for judges to adjudicate disputes. And so the answer to your question is, I think the most fundamental thing is the most boring, which is define what Bitcoin is in commercial law and property law. And that's done at a state level. There are 7 states now that have done that in the United States. There are 43 that haven't, and plus the US territories that haven't. They will. There is something called the Uniform Commercial Code, Article 12, that will be finalized most likely this summer. And then it'll start percolating its way through state legislators in the other legislatures in the other 43 states. But this is enabling. This is the kind of stuff that even the anarchists among us should welcome, right? Because it defines the property rights. There's nothing that violates the non-aggression principle by defining Bitcoin as property. In fact, what it does is it prevents that attack vector of the judicial system ultimately coming after you. And I have to give my hats off to Trace Mayer for helping me understand this. Way back in the early years when I think I first met Trace in 2014. And so he and I were talking a lot. He's a lawyer and an accountant by training, as many of you know. And so he had this, he's been thinking a lot about this for years. What are the attack vectors that are coming down the pike that don't matter when Bitcoin is, $1, but they matter a lot when Bitcoin's $100,000, right? And that's what he was trying to get ahead of. And by the way, a lot of folks ask me about Trace because I know a lot of folks will recognize that we've been friends for a long time. And I was kind of surprised. Trace did pop back up again, by the way. And you'll find him in the tweets about Utah's bill to clarify the commercial law status of Bitcoin. He's standing behind the governor when the bills got signed. So I didn't tweet that out. I was waiting to see if any of his followers from yesteryear would catch that. And I don't think anybody did, but there he was. So he's been working still to get the commercial law status of Bitcoin to be defined so the judicial system doesn't become an attack vector.
I have a special treat for you then as well, Caitlin, but Trace and his wife are currently watching and listening on YouTube right now.
Are they? Hey! Good to see you guys. That's awesome.
I have one more regulatory question because we've been talking about the positive side of what regulation could look like from people who maybe understand Bitcoin, like Senator Lummis. We saw some pretty stupid legislation come out of the state of New York last week.
Yeah.
I'd love just your initial reaction, thoughts, and maybe like a good scolding word to the idiots that are pushing this through up in New York.
Well, look, I mean, the United States is so divided on so many things. And, New York has the right to do what it wants to do. But boy, that was not smart. They want to ban math. They want to regulate math. They're regulating what types of data can be processed in a data center. This is a slippery slope. And boy, you won't see that in the states that are welcoming to Bitcoin. And it's not a red state, blue state divide. I oftentimes take the opportunity to remind people of that. I'll bet you Senator Gillibrand, if somebody asked her today what she thought of that, she would say that the state legislature was being short-sighted. I don't know that she would say that, but I'll bet she would say that because it's pushing the Bitcoiners, the Bitcoin miners out of New York, and it's doing it for the wrong reasons. We've not done a good job as an industry explaining the energy use, which we all defend. And frankly, it's far more efficient. Bitcoin's far more efficient from an energy use perspective than the traditional financial system. You just have to dig in and recognize that the average financial transaction, especially if a foreign exchange transaction, gets processed 6 times. That means it's hitting data centers. The exact same data is hitting a data center 6 times. And it is true that the financial services industry is the biggest user of data centers, and the data centers mostly use grid power, and grid power is mostly not green. And so when you really look at each transaction and try to be honest with yourself about how much power Bitcoin uses, it's actually more efficient per transaction than the traditional financial system is, because of all that duplication and reconciliation of the exact same transactional data. That's one of the things that Bitcoin can help remove and reduce, and that's a wonderful thing.
Caitlin, I'm sorry, it just got brought to my attention something that your business sorry, I want to make sure I'm reading this correctly, but it looks like Custodia is about to sue the Fed. Could you maybe share a comment about this?
I can't share a comment about it. I can confirm it happened this morning. So go
Wow.
ahead and take a look at the publicly disclosed information.
Wow. All right.
What if we make wild suppositions and then you kind of like blink yes for yes and twice for no? Or
all right,
no,
Chris,
good try, guys.
UP, he's losing speaking privileges, scaring our guests.
No, I'm kidding, of course. This is super exciting though. I'm going to be super interested to see what comes out of this.
Well, without going into too many details on this suit, because it is an open suit and we respect that on this show, we will not ask those types of questions. I'm curious, just more broadly, if you agree with the current actions of the Fed trying to raise rates at the rate in which they're doing, given their actions over the last 2 years.
Well, look, we're in an inflationary cycle for sure. That's kind of obvious. Every time you go to the grocery store or fill up your car with gas, you recognize that the U.S. is in an inflationary cycle, and certainly most of the developed world is as well. And it's a different cycle than the past cycles, which have been more demand side. I thought Eric Peters, who's a big Bitcoiner, did a really good job in one of his pieces a few weeks ago, where he said central bankers kept probing how much could they stimulate demand in a deflationary environment, which is where we were, with interest rates coming down to negative levels in some places, especially Europe and Japan. How much could they keep stimulating demand and not hit inflation? And they kept probing, and they kept being able to do it without hitting high inflation. And now we have a supply side correction, and the problem is that it's a blunt instrument to try to adjust demand when you don't have control over supply. And ultimately, things like food and energy are real things. You cannot conjure them out of thin air. And those are the very real problems that we're facing. So I wouldn't want to have to make those decisions. And I'll refrain from making specific comments about them, other than to say it's a complicated world. It just got a lot more complicated than the traditional models implied that it would.
Caitlin, you're a better person than I, because I have no problem saying, Jerome Powell, you're a complete buffoon and have no idea what you're doing. I want to now ask you, though, on the topic of midterms coming up, in California, I guess today is voting day. I wouldn't know. I refuse to vote anymore. I've lost all hope in our political system, especially in the state. But I'm curious if in the midterms, or more specifically in 2 years for the next presidential election, what role do you think Bitcoin and cryptocurrency is going to have on that stage?
Yeah, that's a great question, because there are different estimates, but give or take around 40 million Americans of the 350 million Americans or so own crypto. Okay, not all Bitcoin, but crypto, and so that's quite a constituency. As a group, our industry did really show its face and its power last summer with the infrastructure bill, with the potential to make miners into brokers, et cetera, and didn't get that entirely fixed. But boy, did we send a message collectively to Washington, D.C. by lighting up the phones, right? And email systems, just phone calls and emails going in from this industry into Congress saying, don't do this. And what came out of that was so fascinating. That's the first time Senator Lummis from Wyoming teamed up with Senator Wyden from Oregon. And actually, I was really, really pleasantly surprised when I saw that Gillibrand from New York teamed up with Lummis for the bill that we were talking about earlier, because I was anticipating that it might have been Senator Wyden, because Senator Lummis has forged really strong bonds over this issue with folks that wouldn't have necessarily been expected to form strong bonds, right? They come from, in a lot of cases, opposite political views on most issues, but on Bitcoin and crypto more broadly, they agree. And so what you see is that this is actually creating new coalitions and strange bedfellows. And I actually welcome that. I think it's a wonderful thing. You're seeing bipartisan cooperation. We saw that in Wyoming. The senator in Wyoming who's in charge of the blockchain select committee, there's a representative who's a Republican and a senator who's a Democrat. And the senator is by far the most active and most visible for the Wyoming blockchain initiative now. And he's a Democrat. And so, a lot of the bills that Wyoming passed were bipartisan, veto proof, and strange bedfellows. You wouldn't have necessarily expected these coalitions to be formed around this issue. And so, long story short, I think it is an election issue. I happen to know that there are folks in the Democratic Party who are concerned about the anti-crypto stance, and some things that may be coming down the pike as being something that could blow back among these 40 million Americans who own crypto, and they don't necessarily want to bring a big anti-crypto push right in front of the election. And by the way, again, that's not necessarily just the Democrats. There's certainly, that more the neocon wing of the Republican Party is also pretty anti-crypto. So it's not just the Democrats, it's also certain wings of the Republican. It's probably more so the progressives, although not all. And then the neocons on the Republican side tend to be anti-crypto, which is what creates these interesting coalitions. And it doesn't cut across traditional party lines. And I think that's a wonderful thing. That does tell me there's a chance that the Lummis-Gillibrand bill does end up getting passed and signed into law at some point in the next year or two, because you will get aisle crossers on that.
Love to hear it. It sounds like a very positive and hopeful future for the Bitcoin ecosystem to thrive. Caitlin, I want to be respectful of your time. I know that we're about at the end of it. I wanted to give you the opportunity to maybe make one last comment or share any thoughts that we didn't get to.
We didn't talk much about Lightning, and I am a big fan of Lightning. I do believe that as a scaling tool, that is an incredibly strong and great prospect for the Bitcoin network. And it's tied to Bitcoin natively, which is why it's so important. And that's how we're going to see Bitcoin scale. Having been through the different Bitcoin cycles, I remember back in 2014 when Overstock.com first announced that it would start to accept Bitcoin as payments. Folks did. I bought all my Christmas presents on Overstock.com with Bitcoin that year. I don't think about how valuable that would be if I'd held on to it now, because the honest truth is that's how we built the network, right? If you weren't using it, the network wasn't being built. But now most folks won't use it for a $20 purchase. Most folks are now, Bitcoin is really being used for high value transactions, and it's Lightning that is the scaling network. And I think we will see, we now have a third layer on network with the Taro protocol. I'm really excited about all the engineering that's happening. And I'll close by saying again, the engineers are the most important people in the Bitcoin industry. Thank you to all of you. You're the ones who keep it going. And the rest of us noobs are eternally grateful to you because of what you've done and continue to do and keep doing, because this is powerful stuff and really exciting. And I appreciate you guys having me on. We've tried to do this for a while and had this scheduled for a while, and I'm glad I was able to make it on. Really an honor to be with you today.
So great to
Thank
have
you for joining us. This was an absolute treat. It looks like there's an excuse for you to come back so we can actually have an in-depth conversation about lightning.
Sounds great. Appreciate it.
Thanks so much,
Thank you,
Caitlin.
Caitlin.
Take
We're
care.
going to cut to a
Thanks all.
quick commercial break, guys, and then we'll be back for some news and notes. And yes, we will give P the mic for his insect milk minute. What is up, guys? We are back. There's a lot going on in Bitcoin land. It's vastly different than a week ago where we were literally struggling to tell you news stories that we literally repeated every single day all week long, and I apologize for that, but
How dare you.
grateful for those of you who stuck through it. P, do we want to keep going down the Lummis rabbit hole for a little bit, or do we want to come put a pin in that so I can unpin what I told you to stop talking about while we were on the commercial break?
Yes, let's switch over. Man, there's a particular joy that comes from someone ratioing themselves so fucking hard. And the St. Louis Fed put out a blog post comparing the price of eggs in US dollars over time versus the price of of eggs in Bitcoin. And they framed it, the whole frame of the article was like, oh, see, it's too bad that Bitcoin is crazy volatile. If only this thing was more stable, but if you fuck with it, you'll get screwed over. And it's amazing because they embed charts in this blog post, and it's an interactive chart. So what they did is they basically said like, yeah, Bitcoin's crazy volatile over the last 5 minutes, like, oops, but the chart is right there. And all you have to do is just click like zoom out. And it literally is just like the price of eggs in Bitcoin, like down. And then the last like full third of the graph is just like absolute zero. Like you can't even see what the number is unless you like mouse over it, and it gives you the number of sats. It's absolutely incredible. I am going to go find that chart and I'm going to put it in my background because I'm going to send flowers to whoever wrote that blog post because it's just so potent with meme material and hilarity. It's beautiful. It's a beautiful thing.
But like, let's be honest for a second. Do we really think the person who did this and posted this and wrote this up genuinely looked at this and thought, oh, Bitcoin is bad? Or do we think that there's genuinely someone in the Fed, in the St. Louis Fed at least, who sees Bitcoin and views it as the escape hatch that many of us do, and is almost leaving the breadcrumbs like, hey guys, come
This
this
is
way.
a side of Q I've never seen before. It's the conspiracy theorist, the high conspiracy theorist who's like, yo, the Fed is actually on our side. They're here for us, the people. They want us to succeed. No, man, I think that...
This is what happens when you guys don't let me smoke weed before the show.
No, I think that this is someone just half-assing a blog post article. I would be very curious to know how many. First of all, I didn't even realize that uh, that they posted blog posts on random shit. I need to go back and read them. I also am very curious to know how many times have they mentioned the word Bitcoin in their blog posts, and if this is their first entrant into the Bitcoin blog writing articles, I'm fucking here for it.
So I I don't remember what it was referencing, but I do remember a previous blog post that I want to say stems from 2021 where they were like, this was their introduction to recalculating how the rate of inflation is really affecting US citizens. And I just remember like thinking, at least, like, if you read this satirically, then it's like, oh, they know they're fucking everything up. Like, they know they caused the issue that they're like, yeah, and gas is going to just continue to go higher and higher. We don't really understand why. It has no material, the money supply has no material effect whatsoever on the cost of goods as money continues to circulate the economy at a rising rate. It's like, you literally explained the reason why, but you're the one word of we don't know creates this era of doubt where, in fact, if you just remove that, we don't know. I guess that's a complete sentence. We don't know. Remove that from the entire thread, and then all of a sudden it's like, this monetary supply is causing this. Oh, brilliant. Okay. So it's a spin job, to say the least. I think they do it intentionally. I think they know what they are doing, but I'd like to at least believe, possibly, that like they're not so dumb. Like, if they know what they're doing, but
No,
they're
they have
so
no
dumb.
fucking clue what they're doing.
But hear me out on this. If they knowingly did this, thinking, oh, see, look, Bitcoin is crazy. Bitcoin's moving too much. Like, you can't buy eggs with Bitcoin. Like, it go up and down. Oh, meanwhile, like, dollar just go up, and you literally can't afford a dozen eggs anymore. I'm just curious if they are seeing this and they're like, no way someone's gonna zoom out. None of these Bitcoiners know what they're talking about. Like, they're not gonna zoom. Like, no one's gonna check our work. Just lie a little bit here, and the numbers will make sense for us and like what we want to push forward.
Dude, you sound like Jon Stewart in what's that fucking movie? High Times? No.
Fast Times at Richmond High.
No. The movie with fucking Dave Chappelle.
Which, by the way, one of my favorite all-time movies. Fast Times at Richmond High.
It's like the most important stoner movie ever. Dave Chappelle, a bunch of other dudes. What is it called?
It's, oh my God. Someone in the comments has already said it, haven't they?
Of course. Anyway, the point is,
there's a flavor of Ben and Jerry's ice cream, for Christ's sake.
There's a great scene where
Half-Baked?
Yes, thank you.
Half-Baked. There's a great scene in that movie where Jon Stewart plays like a random like bit character, and he's like, "You ever look at the dollar, man? You ever look at the dollar on wheat?" Anyway, that's you right now. You're like this. You're imagining these like giant like shadowy figures moving in the darkness and being like wizards of time and space. And no, I mean, look,
the lizard people are real.
Oh God. Okay. The government is trying to fuck you over. They are definitely trying to undermine Bitcoin. Whether or not there is some fifth column that is up for debate, there are obviously individuals in the federal government who are good people. There are people who even like are promoting large things, like, you know, I mean, Caitlin Long is not part of the government, but like we were just speaking to, like, doing great stuff. But I think that this is not some very well thought out psyop. I think this is the St. Louis Fed just trying to talk about Bitcoin in a negative light because it's in the news and Terra Luna just happened. One thing that I do think, all joking aside, that I think is important to acknowledge here, and you know, I started this off by saying like, yo, I love seeing people ratio themselves. At the same time, they kind of didn't, because we are, as Bitcoiners, are viewing this and we're like, this is fucking hilarious, because of course we know the context. We understand that we have to zoom out. There are probably, I mean, hundreds of thousands of people who have read this blog post, and I guarantee you only like less than 3% of people are going to zoom out. 99% of people are going to read this article and be like, oh man, I guess Bitcoin's dead. And this is then going to get picked up by, you know, the AP and everyone else. And it's going to be broadcast as, you can't buy eggs with Bitcoin. So I think that, all joking aside, this is potentially an effective narrative attack. And so, as much as we laugh about it, the truth eventually will set us all free. But in the short term, just picking arbitrary timescales and fucked up, ridiculous metrics is and can be a very effective way to lie with statistics.
I mean, the irony of it all is they suspended the M2 money supply chart in April of 2021, but yet they found the time to update a Bitcoin chart. So M2 is M2 money supply is what the Federal Reserve controls aside from interest rates. Like, they control the amount of money going into an economy. So it's funny that they had time, or they took their jobs to update a Bitcoin chart talking about paying for eggs, but yet they can't even update, or they claimed they suspended it. I don't even know what their reasoning was, but they just stopped reporting on M2 money supply come April of 2021. Anyone can go check it out if they want.
Well, they have, so basically what the Fed does is they have all these, specific descriptive statistics that they use to, quote unquote, assess the health of the economy and things like that. There's a ton of them. You can go look them up. But essentially, the the U.S. government, and the Fed specifically, has a long history of simply changing the frame of reference when it suits them in order to push their narratives forward. So what they historically do, they will argue that they change the specific metrics because they don't make sense given the context. So the CPI is the number that you hear a lot. The CPI is supposed to represent a basket of goods, and what they do is they change out what specific goods are represented in the CPI, and they say that they do it because it's like, oh, the average person, they used to include steak, and they're like, the average person never eats steak. The average person only eats like grade F prison meat now, so now we're pricing it in grade F prison meat. And there are ways that makes sense. There are things that they do swap in and out that are reasonable. But in my opinion, the majority of those things are swapped in and out not because they want to accurately represent the basket of goods that the average non-existent American is buying. They do that because it allows them to manipulate what the reported inflation numbers are. In the same way, when we talk about the M2 money supply, they recently, as Chris said, they were like, hey, we don't like the way this is looking, so we're not going to report on it anymore. Instead, they have this new metric. I forget it's like the M2 plus one or the M2 prime or whatever it is. And they basically just changed out what they're reporting on it because, surprise, surprise, their new version shows less money being printed. So it's a constant narrative game. It's a these are perception manipulation tactics. And, all joking aside, this blog post is going to get cited, repeated all over the place, even though, as I said, they literally have an interactive chart in this blog post. You just have to do like 3 clicks to be like, well, they fucking lied. Nobody's going to do that. The average person is going to see this thing and they're going to be like, yep, Bitcoin's dead. Now, selfishly, that's great for us because it means we can buy Bitcoin at a lower price. But for people that are trying to use Bitcoin to save themselves from, as Roy would say, central bank apartheid, it's fucked up.
Do we feel like we shat on the Fed enough? Should we move on to the next one?
Fuck the Fed.
Okay. I need to address the picture P that you just posted on Twitter because, oh my God, I'm going to have a nightmare. They did not actually make Mickey Mouse look like that, did they?
Oh, you better believe it.
I also posted this in the chats over on YouTube. But like, this is terrifying.
Look, I mean, everyone knows that, back in the olden times, everybody saw in black and white, as you can see from this trajectory. It was sort of a sepia tone back around the time when Mickey Mouse was first created. And then slowly humans evolved over the course of the last, 7,500 years, the ability to see color. But also they came to understand that, terrifying nightmare creatures are probably not the best thing to advertise to children. And I think the increases in technology, in human productivity that we've seen over the last, whatever it is, 100 so years, are directly tied to, as this graph shows, the amount of insect milk that Mickey Mouse has been consuming. Not only did it allow us to see, the wonderful shades of color that we can see, but it also turned Mickey Mouse into a less terrifying creature, which then people are getting more sleep. They're able to dream more. They're able to form more, expansive ideas, and that directly led to the invention of Bitcoin, the discovery of Bitcoin, if you will.
I would argue and say that we overcorrected, and the second to last Mickey Mouse was peak, and then we started doing too much insect milk, and then we overdid it. But that's just my 2 cents.
You know, we can agree to disagree on this one.
I want to move over to the state of Wyoming, easily my favorite state in the whole country. I owe, I guess, everyone an apology because for months, while I pounded the drum of do not trust a single politician, they're all grifters and liars, and yet I would continue to hold Senator Lummis as the gold standard. You made me look stupid. I don't like that. I personally don't really think that this bill is as helpful as a lot of people think it is. I think you make a lot of excuses for altcoins, and there's an exit hatch for them. And I think it will be taken advantage of. And I think this is the perfect example of hold your damn line. I understand how bills work. I understand compromises have to be made. I understand this isn't even the final version. This is going to get passed through both houses of Congress, and it'll get ripped to shreds and more bullshit will get added to it. I understand these. I'm just really fucking sick of Web3 and all of the marketing slogans that people think are legitimate now getting mixed into this and potentially causing a longer term issue, because it's going to be a lot harder to go back and retroactively fix this bill if certain allotments are given to shitcoins. But that's my personal belief.
Well, you got to go into more specifics. You were speaking in like generalities. Can you define how shitcoins are treated in this bill and why you're concerned about it? Also, this is the price. This is the chart behind me of the price of eggs in sats over time. Okay,
yeah,
enough distraction with my background. Give us a description.
I'm going to try to, apologies. I'm going to be reading directly off my laptop here. Someone take the mic from me while I Control F to find the exact part where they essentially say you can go from a security to a commodity.
I don't want to take the mic because my background is strange and might, be disconcerting to some people.
Well, all right. I'll take the mic for a quick little tidbit. So apparently breaking news, California-based superfood chain Everbowl just accepted its first Bitcoin payment for the entire franchise fee. So I'm guessing that the owner or the person trying to get into the franchise concept was trying to put that in. But yeah, we'll go back to Q. What you were looking for the thing?
All right. So essentially, this legislation uses the Howey test to determine that an ancillary asset provided to a purchaser under an investment contract is not inherently a security. But we already know the flaws with the Howey test. I think it was on a Spaces yesterday or last week where someone jokingly said that, oh, if you run the Howey test if you put hex through the Howey test, it passes. And beyond that, in order to be classified as a security, the digital asset must provide the holder with a debt or equity interest in a business entity, liquidation rights, or entitlement to interest or dividend payments from a business entity, profit or revenue share in a business entity derived, quotes, solely from the entrepreneurial or managerial efforts of others, end quote, or any other financial interest in the entity. Digital assets that are not fully decentralized and which benefit from entrepreneurial and managerial efforts that determine the value of assets but are not debt or equity, or don't create rights to profit or other financial interests in a business entity, are not classified as securities, as long as disclosures are filed with the SEC twice a year. So that's it. Like, you can have a security as a shitcoin, but so long as you file with the SEC, like, you don't fall under those guidelines and parameters.
Quick question to you on that. So you were saying that even if it fails the Howey test, you could still, like, that's what you're saying, you can convert it into the commodity basis, or am I on that wrong?
No, I think you have that right. Like, the Howey test is like legitimately a part of this, and it says it using it to determine that something is not a security. So,
but I think I don't want to speak for everything, but that would encapsulate the majority of the cryptocurrency market, that like Bitcoin passes the Howey test, or I guess, yeah,
right,
it passes the Howey test that it's not
the
it's
language
not a
in this
security.
right, but the language in this is not necessarily saying, oh, if you pass, then you are. It's just simply saying it's using the Howey test as the guideline. So I have my own issues with the Howey test itself as just a measurement of whether or not something is a security. And I think legitimizing that rather than being thoughtful, it opens the door. Like, you can manipulate things to pass the Howey test, and then all of a sudden you're not a security, but like you are a security. The moment that a centralized entity is the one dictating or deciding how much of an security, asset, commodity, we'll use all three in this example, is getting sent out, as long as this centralized person or business or entity decides the supply that's out in the marketplace, to me, that can't be anything other than a security. Like, there's an argument to be made that the gold miners do have the ability to manipulate the markets, but they're disincentivized from doing that because the cost of mining and getting new gold is so expensive that they need to liquidate it in order to keep their funds keep their operations afloat and going. Very similar to Bitcoin mining, but we don't need to get into the nuances of that with the way debt is so cheap right now. It's very, very difficult for me to stomach this and think that scammers and grifters like Do Kwon and Richard Hart are not going to just sit there and find the loopholes and use them to their advantage. And that's what my concern is here. Because instead of having a case-by-case analysis, which is going to be vastly more expensive, to have this umbrella system that can very easily be cheated, manipulated, or worked around, you open the door for, it's almost like a, hey Richard Hart, can you make Hex look fine? And you really don't think that man's going to do something like that? That's where my issue in this lies.
I think one of the things though with the Howey test that it gets a lot of the other cryptocurrencies, or at least a lot of the other scams, is when they're doing like an ICO, or they're doing like a pre-mine, like that catches the majority of them, I would say. Even any of the previous like ones, the true forks, or I don't want to say true forks, but the forks of Bitcoin, that they were basically doing in essence like an initial coin offering, because one, they either had a corporation or a company running it, and then they were like, oh, we're just going to copy the Bitcoin blockchain and do an airdrop. Or if they're creating an all new one, they're like, oh, we pre-mine 50%, 70%, 80% of the supply. That all falls under securities. So I think that catches the majority of them. I guess the only other way is if you were to relaunch Bitcoin with like, hey, this is the white paper, and kind of do it how Satoshi did it. But then you don't have the network effects. So it's still not as powerful as Bitcoin as it is.
Yeah, there will only
Chris,
ever be one Bitcoin.
But Chris, like in that example you just provided, like what's stopping someone who created a shitcoin from, okay, they had 90% pre-mined. Okay, you reissue however much of the cryptocurrency or the token that you need to, so that the pre-mine percentage all of a sudden falls below that threshold. It's a very easy manipulation.
Yeah, but if there's any pre-mine, that's technically a security then. Like the only way to do it is if you were to restart Bitcoin, or start a new Bitcoin like that. But that would be probably the only case, I would think.
The genie's out of the bottle.
I don't like it. Lummis, come explain yourself, because this is not sitting well with me. That's I'm not pleased with this. I went from being very, very excited to seeing this bill to being very, very disappointed. I guess the last thing, we didn't really get to it in our conversation with Caitlin. There's also stuff in this about energy, and they're going to try to combat some FUD, it seems. how that's done is through another study that's going to be done through the CFTC and the SEC. Whole lot of studies, not a lot of action. Let's see how it plays out. We talked for a little bit on the tax side of things, specifically the tax that these exchanges and the issuers are going to feel. However, there's also a lot of conversation going around the cap gains tax and the way it works. It looks like based on where this bill is at right now, the exemption is up to $200 on a Bitcoin payment for goods and services. I don't know how you guys feel about this. I mean, look, I'm of that side right now personally, where I don't really feel the inclination to spend my Bitcoin unless someone's like, oh, I only accept Bitcoin. I'm like, well, you're being dumb, but okay, here, I'll go buy some sats and then send it to you really quickly. I'm curious if either of you guys think that the 200 limit is enough, not enough. I saw the earlier bills were looking at $600.
Yeah, I mean, $200 it's a great start, but it's a pittance. I mean, $600 is even better, and especially as things inflate more and more and more, $200 is going to be fucking nothing. It's like a drop in the...
Yeah, I brought that up. It's a great, sorry to cut you off there, Pete, but yeah, I know Lummis was asking for comments. This was on one of her posts a couple months ago, and she was saying the $200 limit or the $600 limit being exempt. But exactly to your point, like if we're inflating the money supply, that's going to go away very quick. I was like, what if we put it a 1 million sats? Like you're exempt anything 1 million sats or less, to just keep it in the new standard that you're using, the SAT standard. I just think that would be better. 1 million, 2 million sats, whatever it may be, at the time that the bill drops, if you say it's $600 in USD, whatever the equivalent of that is in sats, I think that would be a smarter way to do it personally, but.
There is also a really, really fun little bill that I'm just going to keep on picking on Richard Hart, because when you dance, like the way you dance and dress the way you dress, like you're asking for people to bully you. So I'm going to bully you. There's a little sentence that essentially urges and requires that all cryptocurrencies allow for their holders to self-custody. Like in Bitcoin, we talk about this a lot. Get your damn keys, get your damn coins off of exchanges. Fuck you, Alex.
Alex just made an incredible joke. I'm sorry, this is what we call a terrible user experience if you're doing this, but it's too good. It's too good. I have to repeat it and give Alex credit. He said that Richard Hart lives rent-free in Q's hair, which is true. Q is got this
Corey
bug.
lives rent-free in my head, and I felt so bad even asking Caitlin about price.
I love that, like, you had one conversation with Corey Clifton and you're like, my life has changed. I am a reformed man. He may as well have like baptized you in the fires of the bear market live on camera. P.S. Corey, you should start doing that. I'll take a small cut for the idea. But like literally like one conversation and you went from like all price all the time to just like price is but a concept. 1 Bitcoin always equals 1 Bitcoin.
I still think conversations around price are valid, because that's the entry point for everyone, or not everyone. That's not a fair statement. But a majority of people
wait, hold on. I think that is a fair statement. I think that's a totally fair statement. The vast majority of people get into Bitcoin and they're like, number go up. I mean, look, did I claim, do I still maintain that we're going to be at 500K by the start of Bitcoin 2022? 500K by conference day? Yes, absolutely. Time travel will be invented. It's going to happen. Count on it. There's a reason that joke is funny. It's because everybody's obsessed with price. We all think about it.
No one laughed.
Fuck you, keep going.
All right, I'm done whispering. But I think it's interesting for some of these just pure blatant scams that require you to send Bitcoin, and then this person on your behalf is going to hold for a predetermined number of years before they disappear. I think those scams should hopefully see the end of days. I'm hopeful also that with the urging of the government saying this, things like self-custody will be taken more seriously. But also, look, in the same way that a law can get passed just by a few signatures, and then there you go, this is a law that, if you break it down as simply as possible, that is in essence what happens. How many signatures and how long it takes, we don't need to discuss that. But just as easily as they could pass forward legislation saying that, hey, self-custody is a requirement, it's mandatory, everyone needs to hold their own stuff, they could just as quickly say, or U.S. government approved banks or U.S. approved whatevers are the new custodians of your Bitcoin, of your cryptocurrency. I do, however, think it's going to be a lot harder to convince everyone to give up their Bitcoin if they're all holding it themselves versus them just calling Brian Armstrong and being like, yo, give us your Bitcoin. And be like, okay, daddy.
I mean, I was only half listening.
Thank you, P. It's only your job to be listening and having a conversation.
I got you, fam. I got you.
Pay
Look,
him to be my friend, and he won't even do that.
I'm sorry. All right. What's next? What else we got?
Well, Chris disappeared. We can talk about the California stuff. We can also talk, I think actually this could be interesting. A little bit of a spin, but Biden yesterday is rolling back a moratorium, ban, whatever, tariffs that were seen on externally produced solar panels, whatever. Essentially, the whole solar industry saw a nice little boom yesterday and today as a result of Biden potentially rolling this back. And I think it's really interesting to see that happening at the same time that we're dealing with this ongoing energy crisis, the same time that we're seeing a state like New York passing anti-Bitcoin mining legislation that, yes, their legislation specifically denominates any Bitcoin miners that are using carbon energy or fossil fuel energy, those type of mining are going to be put on a moratorium for the next 2 years. Everything in my opinion is interconnected. And I think it's interesting that you can see a new influx of solar, whether or not you agree with it, whether or not you think it's valid. It'll be interesting to see how infrastructure and businesses respond. And I'm curious if any Bitcoin companies or miners in particular will develop ways to utilize this window to capitalize on solar energy in the hopes of appeasing government regulators like those in the state of New York.
I think they definitely will. I mean, look, I'm trying to think how to make this even the broadest statement possible, but like any effective business, any effective enterprise is one where you are able to use information arbitrage and take things that are in low demand in one place and move them to a place where they are in high demand in another. And, this goes back to the thing that I kind of very briefly spoke to with Caitlin Long, but like, we live under the delusion that we live in a capitalist society or we live in a free market. That is not true. There are constant forces that are much more unnatural than like supply and demand. And this is an interesting one. I hadn't heard about this yet, but if solar panels are now more economically feasible to acquire as a United States entity, then if that changes the economic calculations and companies will, it's like, it could be worse for the environment. It could be worse for them as a business. But if the United States has made it more economically feasible in the short term or the medium term, then businesses should absolutely adapt and figure out how to arbitrage that opportunity to, further their own ends. That is how businesses and enterprises work. So, without knowing any of the specifics, I think it could drive interesting innovation and business strategies. I mean, I don't see how that wouldn't happen. What do you think?
I mean, you just repeated everything I said.
You're welcome. It was that important.
All right, next story. Chris, what's this news out of the worst state that I somehow still live in?
Yeah, so that was, let me find it real quick. Yeah, California-based superfood chain Everbowl just accepted its first Bitcoin payment for the entire franchise fee. So this is not just some small
Oh,
chump
But we
change.
just talked about this one,
no,
right?
no, no, no. I've heard of Everbowl. They're like a acai bowl place in Venice Beach. Like it's
What?
the most
Oh
LA,
my
California
God. That is some
thing.
fiat bullshit right there. The only thing that would be worse would be like avocado toast franchise.
No,
But
it's like
go ahead.
it, like that's interesting through the lens of like, oh, you have an interested party that's gonna own a new operation of this. I'll be fully transparent that like as a Bitcoiner who like wants to go and support businesses like that, like I've never been there because it's just like I don't go and seek out acai bowls despite how granola in LA I can actually be. Um, it's fascinating though that they're really pushing forward the marketing of their business through that lens. I think what they're really playing for and looking at is, hey, any aspect of our business vertical that we collect money from, including franchise fees, including potentially real estate, whatever it is, we're open. We're open to transacting in Bitcoin. And like, don't be surprised if all of a sudden you see an Everbowl pop up in a place like Miami or a place like Austin. It'll be very interesting. I could see this sort of turning into almost like the case study is the wrong word, but like the example for other businesses to follow of like how to go fully onto a Bitcoin standard.
Wait. I mean, maybe.
I know what I'm saying and why I said it. I know I said it like that for a reason. Other businesses will follow suit. Everbowl did it first.
That's like
It's
when like a kid is like, has like a lemonade stand on the corner and they sold you like a little, like a little 6 ounce Dixie cup, paper cup, like one of the shitty ones that like immediately melts full of lemonade. And you're like, I think it's only a matter of time before Minute Maid is just taking over the world and doing everything in Bitcoin.
Wait.
I mean, my point is, I think you're right that it is a like a PR play. It's basically a way for them to say like, hey, we're interested in Bitcoin. And to your other point, I think that is still potentially a significant thing. I think the more types of news that we get around large popular entities exploring Bitcoin, or even if it's like signaling, like this is probably like, somebody is, 28-year-old son was like, yo, we got to do this in Bitcoin. Like, let's fucking go. And it was just like incessant and annoying. And finally the person who was like had to approve the transaction was like, fuck, finally. Okay. Shut up about it. And like, that's it. That's all it is going to be. However, that's still interesting because if it gets reported on, then it potentially inspires other people and maybe it leads to more. But
Chris, what's the franchise fee?
Yeah,
Like,
so I was going to expand on that. So the franchise fee, it varies by franchise. I don't know what it is for Everbowl, but like perfect example, I think like if you want to buy a franchise like a Chick-fil-A, I think it's like 750,000 or $1 million.
no, that's
fuck,
not
are you
true.
serious?
That is not true. Chick-fil-A, a franchise fee is $15,000. It's the cheapest franchise of any national
Oh,
chain.
wait. But how does a franchise fee work? It's like you pay
Franchise
for
fee
everything.
says you are paying the national corporation the right to own and operate a business that they have. So like for
An independent business that has the name of Chick-fil-A.
no,
that's
no,
tied
no,
into-
not an independent business. Like I know this through Subway a lot because like my dad built a ton of Subways for a family friend who owns a bunch of Subway sandwich shops around Los Angeles. So they pay Subway headquarters a fee every single time they want to open up a new location. And that's just the starting point fee. Each different national chain has their own systems in place. McDonald's is really famous for like they go and they buy the land and they are your real estate agent. Subway doesn't do that. Subway is like, oh, you just want the right to sell Subway sandwiches like under our brand. All right, this is how much it costs just to open the shop and have the sign. Then you also, from Subway in particular, you have to buy directly from them all of the different equipment, all of the Subway branded food, etc. All of that stuff you buy directly from Subway. So that's in addition to the one-time franchise fee that you paid when you open up. Chick-fil-A follows a very similar model to McDonald's, and they have like very famously the cheapest franchise fee in the entire system of fast food because they own the underlying real estate. They are your landlord, and they also own all of the equipment that they give you once you pay the franchise fee. So you don't own any of that, unlike at Subway where you own the bread baking, the oven that you bake the bread in and all of that stuff, and the shitty little oven that they toast your sandwich in. Like, you own all of that with Subway. So the reason I ask, though, like, my assumption is that maybe at most it's 100K. Like, there's no reason a non-nationally recognized fast casual business should cost you more than 100K as a franchise fee. But let's just, for argument's sake, say it's 100K.
I just looked it up. So it's 20K. So I was conflating. Sometimes the franchises have a net worth requirement, and that's what I was conflating. So you need your total assets or portfolio of your assets in order to be 750K or $1 million.
Chick-fil-A?
Chick-fil-A is actually not that high. It's only 350,000 is your required net worth of total assets. And Chick-fil-A's fee, I think, was 70. No, McDonald's is 45K. Everbowl's 20K. I don't see what the Chick-fil-A franchise fee.
Chick-fil-A is like famous for it being cheap, like $10,000, $15,000. Like, they're famous for that. Like, just Google search Chick-fil-A franchise fee. But in the meantime, but I want to talk about
10K or 15K US Canadian dollars. So 10K
Boom.
US dollars. Yep.
Boom. Okay, so let's do the evergreen 20K. So based on what we learned from Jack Mallers at Bitcoin 2022, there is a 3% bank fee for transactions. Now, all of a sudden, 3% of 20K, that comes out to about $600 if I'm doing my math correctly, right? So chump change, nothing. But let's extrapolate that to a bigger business model, like maybe a Subway that costs $200,000. And 3% of $200,000 is $6,000. And all of a sudden, if Subway were to start accepting Bitcoin for their franchise fees for every single franchise that opens up, and you're saving $6,000 per transaction because you're no longer transacting fiat, but you're actually transacting dollars, dude, seriously, I need to go call someone at Subway HQ right now. Like, what? But that's I think where it gets really, really interesting. Less so with the Evergreen, whatever the frick this acai bowl company is. It's more interesting that it sets the stage for the bigger companies that will really start to feel the material effects of, hey, you can pocket that 3% fee that the bank would have taken if you're transacting this on US dollars versus if you do this on Bitcoin, that you take that money home. Like, that's just money that never existed in your bottom line. You look like you want to say something, P.
No, I'm just thinking. I'm just trying to figure out, again, with no actual information.
But there's not like
whether. Well, I was going to say whether this is. I think it's. I think you're speaking to things that are true, which is that the incentives of Bitcoin are inevitable and very significant. And I think what Jack Mallers is trying to do in terms of empowering people to save that percentage fee is huge. But I don't know enough about it to comment on it. I think we're far afield from a single franchise being paid for in Bitcoin.
I guess. I mean, we literally just reported on a story where a single franchise was just paid for in Bitcoin, so it's happening, Pete. But
fair enough.
You can go back. You can go back under your
roll the tape,
block.
Chris. Roll the tape back.
We're rolling the tape.
That was the rewind noise. Chris, you've been setting up a Lightning node, which I've been super excited about. Q, when are you going to set up a node?
I want to let this will be my second node. So I had a Umbral node. I flashed it. Now I'm doing a my node. So I'm going to have two nodes before Q has one.
Wait, guys, Snoop Dogg employs a full-time blunt roller who got a raise.
No. Don't change the topic here.
Yeah,
when are you setting up a node, Q?
Oh. Well, no, honestly, my plan to set up a node was when I came to Nashville, I was going to go get scrap material from the Nashville dump and then make it with you.
Yeah, absolutely. I'm here for it.
We were going to film that and then post how you can go dumpster diving to build your own node.
I fucking love it. One of the things
I'd really recommend you do it like the build method. I'm sure P would help you. Like, I mean, you can get a pre-built one, but I think it would be good to learn the building. It's pretty easy.
Q needs the Bitcoin machine. Plug and chug, and just start playing. Start doing his data analysis right away.
Yeah, I got a node for you, bro. I'll hook it up.
Dope.
One of the things
that's how serious of an issue this is, that Alex McShane literally popped in on camera, interrupted the live stream. That's how serious of an issue it is that I don't have a node right now.
It's a huge problem.
We should be able to get all the employees up to par. You know, get a node, get cold storage. If anyone needs help,
I think it's a really bad look, by the way, that I'm very publicly sharing the fact that, like, yeah, I tell you guys you should all operate your own node, and then my dumbass does not have my own node.
Well, hold on.
No, I think it's important to be honest about that, right? Because it helps people understand that it's a journey. They don't feel so bad. They can say, I know more about Bitcoin than the host of Bitcoin Magazine Live.
You're not helping my case here, Alex. Like, who let him into the Zoom call? This was supposed to be a private meeting.
Sorry, I'm leaving.
Anywho, so like Snoop Dogg's.
Well, hold on. I just want to say, not everyone needs to run their own node. Everyone, in my opinion, should. But you can absolutely use Bitcoin as incredible savings technology. You do not have to run your own node. That's the beauty of it. If if you trust me, you shouldn't. But if you did, I could be running a node that you would be connecting to with your, the wallet on your phone or with the desktop wallet you were running. So. I think that running a node is it's almost like a rite of passage, and it is a very important aspect of using Bitcoin in a sovereign way, but it is not, strictly speaking, required. So I do want to make that clear. I think it's cool. I think it's awesome. You learn a ton, but don't feel bad that you don't have a node. You're doing more for Bitcoin education than the vast majority of people that work at lemonade stands. So. You should feel proud.
I mean, look,
That was a callback.
I'm on my Bitcoin journey just the same as all of you. And it's fun. We're all learning in real time. And there are certain things that attract me far more than others, and vice versa. There's nothing wrong with that. So that said, like, I buy all of my Bitcoin that's KYC'd. So to me personally, unfortunately, there's so many other issues with my data and information, and in my personal opinion, that I've made very clear to Brian Armstrong lookalike that I needed to handle before nodes and such. It's fine. I'm honestly, Andrea, you shouldn't have said that, because now I'm like very tempted to have you come on camera and say hi to everyone so we can introduce our newest video editor to the entire world. Yes, just do it. Just come say hi.
No, look. Well, and Andrea can come on when she has a node, and it could just be like an image of her, riding on top of the node.
Okay. So I was just quickly applying to be Snoop Dogg's new blunt roller. Interesting. So this is breaking news. Damn it. Now I just checked the source though, and I don't want to break it.
Well, then don't. I mean, unless it's true and it's interesting and it's related to Bitcoin, then you should break
No,
it.
it's like, it might be true. It's so relevant to Bitcoin.
Now you got to tell us. You can't hold back. Give it to us straight. The people want to know.
All right, the idiot who always says breaking just broke another story. So take it with a grain of salt. But New York State governor will not commit to signing the Bitcoin mining ban. That doesn't necessarily mean they're...
Wait. Will not commit to signing it? That seems like a non-story.
Well, like that's the thing. It's like, it's coming from the idiot who like loves to clickbait you. And then in turn, like, as you like digest it, you're like, wait a minute, like, that doesn't mean they're saying no to it. That doesn't mean they're approving, like... I'm a 15-year-old kid. What can I say, guys? Alex wrote penis in the chat. That's all.
Wait, yeah, that's a non-story, dude. Well, I mean, that is actually a great, like, annoying clickbait title. Yeah. Will not commit. Like, who gives a fuck?
Yeah.
Next
Like,
story.
if you see this story circulating
story.
on Twitter later, like, just vet it yourself, find an actual source. Don't believe Satoshi action. Jesus, I just went over to the stream and saw how hard my eye rolled talking about this. Okay. Now another one from CoinDesk. Ken Griffith Citadel Securities is going to build a crypto trading arm with the help of Virtue Financial. I bet all of the Wall Street Bets crowd is really excited to see Citadel get involved in a cryptocurrency exchange. How long until that exchange crashes and burns?
Who knows?
Well, let me caveat this. Will the Mets win the World Series? Yeah. Jesus, I know nothing of baseball. Will the Mets win the World Series before Citadel's exchange even comes to market?
Being a Mets fan, I
I
hope
was about to say, aren't you a Mets
fan? Being a Mets fan, I hope that's the case, but we'll see. I don't know. We have a good team this year. They're playing well. I will give them that.
Oh, guys, PayPal. No one's excited about this.
That's it. That's a story. Guys, shut up for a second. PayPal.
Have you heard of
bro?
Have you heard of this app though? PayPal. I've never
What's the
heard
story?
of it before.
What's the story?
You know how, for a year plus since they've been offering the ability to buy Bitcoin, but you couldn't actually custody it yourself. They would hold it on your behalf. They're actually now announcing that you will soon be able to send Bitcoin to yourself off of PayPal. I think this is a huge development. It's a step in the right direction. You're also, if I'm not mistaken, like Robinhood made a similar announcement during Bitcoin 22, where they're now releasing their own version of a wallet. You're seeing PayPal. Indeed. Like this to me is a sign that, the conversations that we have on Twitter, whether it's shit posting, whether it's calling out these companies from doing just like the wrong thing for what the user experience needs or requires, they're receptive, they're listening, they're paying attention because we vote with our dollars.
Yeah, absolutely. I mean, I think I can tell you, when I was organizing or, doing the programming for Bitcoin 2022, was in active conversations with Robinhood, right? They made this announcement at Bitcoin 2022 and going back and forth with them about like this being, it being super important that you can take your Bitcoin off the exchange. And that was something obviously that they had announced many, many months back, but they certainly started moving in that direction initially because of all the pressure that they got online. And, we helped them understand that was something that would be very significant to announce at Bitcoin 2022. And more importantly, like there needed to be a date and that we needed to be able to put that in concrete terms. I say this because what often happens is companies will announce like, oh yes, like we're starting to think about maybe, or we're going to do this in the far future without a specific date. So what I want to see from PayPal is a date or at least a quarter when this will be possible. I think otherwise it's just kind of, hype. Although it is interesting that it is happening in the bear market. Normally companies do this when, the price is going up and they're like, oh shit, we got to get some of that sweet, Bitcoin bull run money. So I think that's a positive thing, but it'll be a non-story to me until I get a date.
I love it. We lost Chris, but I'm still going to send us to a commercial break because we're going to be joined now by Ansel and CK for a new episode of Fed Watch. Oh wait, before we do that, use promo code FOMO, get 10% off of everything at the Bitcoin Magazine store, and of course, buy your ticket to Bitcoin 2023 so that I can keep my job. You know the drill.
Bitcoiners, welcome back. We got another episode of Fed Watch. This week, we're bringing back the legend, Dylan LeClaire. He has been working extremely hard at Bitcoin Magazine Pro, and they just dropped their May newsletter, their May monthly report. So great content set up. There's a lot to dive into. The Bitcoin market has been crazy. Welcome back to the show, Dylan.
Thanks, CK. Happy to chat with you and Ansel.
So we noticed that your 100K hat is gone. Sounds like you might be getting a little bearish. Excited to get into all the market outlook with you.
Did I wear that last time? Yeah, I guess I got to whip that out next time. Let's bring it back.
Hey, always be bullish. Ansel, what are you excited for?
Well, I just wanted to pick Dylan's brain about this new report. Tons of good charts in there. I mean, he covers not just Bitcoin all the important parts of Bitcoin, on-chain metrics, fundamentals, but also some macro stuff, which, we cover in depth here, like the CPI. We'll get into that towards the end. But first, Dylan, welcome back to the show. What is your biggest, overall market analysis of the sentiment of this market? Are we in a bear market or what?
Yeah, I would definitely say we're in a bear market. I don't think I need to say that down, 55, 60%. Just kind of classic bear market where I think news does nothing. I think just today I saw someone tweet about how PayPal, announced Bitcoin withdrawals, and it's like a fairly typical headline. But in a bull market, price pumps on something like that, right? We saw a huge capitulation of spot volume and derivative volume post Luna crash. And I think now it's just, anyone that's kind of the speculators and the visitors are gone. And it's just kind of the hardened bets in the space. And we're going to, we're due for some consolidation, and that's fine. It's nothing that Bitcoin hasn't done previously. The last time it did so was, around an order of magnitude lower. So nothing but a thing in Bitcoin world.
So do you think, you said they're classic Bitcoin bear market, do you think we're going to go down 80%? Where are we in this consolidation?
Yeah, I think it's interesting because although Bitcoin did go to 64K and then drew down post China minor ban and went up to 69,000, it didn't really get too much of the blow off top, extreme parabola relative to previous cycles. So certainly anything's possible, and I like to tell people whenever they buy Bitcoin that at any point the price can go 50% lower than where it's trading today at any time in a cycle or in the Bitcoin market. I think an 85% drawdown would be quite extreme, and I think there's a lot of support both from like a technical perspective and a volume perspective, as well as just kind of like a historical cost basis analysis, like what we refer to as on-chain analytics in the mid 20s, so like 25, 24,000. That's the average user cost basis. Certainly we've dropped below that in previous bear markets, and anything's possible. But prices kind of chopping around at 30,000 and looks like there's quite a bit of support under us.
Dylan, we've been talking about like a 29K kind of line where, it seems as though Bitcoin's holding. We've also talked about how the longer we stay in consolidation here, the more likely we are to test that next level down. What's kind of your take on where, this kind of line of support that we've been kind of ranging around?
Yeah, so the good news is the derivatives complex that historically, especially in kind of previous cycles, whether it was 2018-19 bear market, where BitMEX was dominant, to the March 2020 crash, the Bitcoin kind of, or I guess broadly crypto derivatives complex looks a lot better. So in terms of just the massive flash crashes, it would take quite a bit of spot inventory to get there. The derivative market liquidations that we've seen, say in May of 2021, when Bitcoin went from 40,000 to 30,000 in a couple hours, that doesn't seem like it's in the cards just based on the collateral type. So majority stablecoin margin for collateral, not Bitcoin, which is good for Bitcoin derivatives. And just by looking at funding rates, you can see relative positioning, and it's not very risk on. There's that speculative kind of activity that Bitcoin's going to the moon, 100K, leverage long your longs. That sentiment is just not there. We can see that in the data. Never mind the sentiment. So positioning from a derivative standpoint looks really, really strong. And if we go to the last chart, it's chart 8 on the slide deck. That's just Sam and I included that. That's the spot volume. So that's showing Coinbase, which is obviously the dominant American exchange. And then the perpetual futures volume aggregated across a bunch of different derivative contracts. And so we can see those like various volume spikes. And so, historically, volume spikes of that nature, Bitcoin just trading hands in that size, signals somewhat of a market top or a bottom, just some kind of significant change in the market structure when you see that huge volume spike. And so certainly Bitcoin could go lower, but from a kind of a crypto native perspective, that certainly seems like somewhat of a kind of a capitulation event where a lot of kind of market participants just indiscriminately just dumped their holdings.
Very interesting. Yeah, there's another slide here. Number 2 is the liquidation events. And so this exactly what I was thinking, that it almost looks like there hasn't been a big bottom liquidation event, but then your spot volume here that you're showing on the other slide is showing this. So would you say there's still room to have more liquidations in the market? Because we always seem to have that, the big wick down at the bottom of or to set the bottom in these bear markets. Or my kind of preferred way of looking at this is, we're kind of bottoming slowly and we're building up on a base. So, or do you think there's more liquidations coming?
Yeah, I think, it just goes to show you the difference in market structure. So if we're looking at the, spring, summer 2021, where 70% of the Bitcoin market, the Bitcoin derivatives market, was actually using Bitcoin or crypto as collateral. So there's like a really convex nature to that during drawdowns, where your collateral is going down, and your P&L is going down, and also these traders are paying 40 to 50% annualized rates to leverage long Bitcoin. So imagine taking out a 50% loan from your bank to buy Bitcoin at 60K. Obviously, that's not going to end well, and that's essentially what traders were doing, obviously with a variable financing rate, but it was extremely elevated for a long period of time, and that all got wiped out. So now, those rates to long Bitcoin are right around neutral to long or short, and it's just traders paying between each other, and the collateral type has changed. So I think a derivative liquidation is obviously possible, and we're going to see Bitcoin chop around, but to the size and magnitude we've seen in previous kind of huge capitulation events, say, of Bitcoin's past, it just doesn't seem to be in the cards as of now. And obviously that can change with the traders positioning, but it seems like most everybody's, completely de-risked in the derivatives landscape.
Awesome. So is that a sign of decoupling in general between altcoins and Bitcoin? And then how would you expect that to move forward in the future? Do you expect like, say, stable coins get regulated? Is that going to help altcoins, or vice versa? What do you think is this decoupling between altcoins and Bitcoin?
Yeah, well, I mean, I think certainly in bull markets, altcoins, while obviously they're very different from Bitcoin and their value proposition, they're often just kind of riding off the liquidity tide and serve as beta Bitcoin, regardless of if they have any value whatsoever. They almost have some sort of embedded monetary premium due to the influx of newcomers in this space, and Bitcoin pumps 5% and random altcoins go up 10%, 15%. And certainly, if you look at the alt BTC charts, whether it's Ethereum or name your favorite altcoin from the past 2 cycles, the chart in Bitcoin terms has topped, and it looks actually really, really ugly. And so regardless of, I think, whether Bitcoin goes up or down, I expect in a lot of these, large altcoins load up coin market cap and, pick your choice. I think in Bitcoin terms, there's a steady bleed happening, especially kind of post Luna debacle, while all of these altcoins aren't structured in the similar way that Luna is, where it's going to hyperinflate in supply if the peg breaks, if it's stablecoin. A lot of people, I think the confidence was shaken in what the actual long-term value prop of these layer ones of these projects are, and that's why they're just continuously bleeding out in Bitcoin terms, which is what matters in the crypto complex.
I mean, all of this stuff is just oscillating around Bitcoin. There's one of my favorite charts is was actually posted by my boy Nick Ward, but it was kind of like the Bitcoin price action and then all the other altcoin price action, and it really was very clear where the signal was and where the noise is. Dylan, I want to jump into a lot more of these charts, but I also want to talk a little bit about Bitcoin Magazine Pro and what you guys put together every single month with this monthly report that we're going to dive into. Can you just talk a little bit about that stuff and maybe even tell people where they can find the monthly report if they want to learn more?
Yeah. So Sam Rule and I, leading off Bitcoin Magazine Pro, essentially just want to objectively dive into the Bitcoin ecosystem, whether that's just the pure price action of Bitcoin. We cover Bitcoin mining, we cover the macroeconomic landscape as Bitcoin is increasingly becoming intertwined with the macro landscape. We cover derivatives. We kind of just combine it all to try to present a transparent view of what's happening. And so we use a kind of a data focused and data oriented approach and a lot of visuals, as well as just kind of narrating what our thoughts are with what's happening. And so you can find that at bitcoinmagazinepro.com. That links right to our Substack. Give it a shot if you haven't seen it. We have a free tier where you can kind of test out what we do, and we put out stuff 4 to 5 times a week, as well as a monthly report post every month.
So Dylan, what's in this monthly report, and I guess get us started on some of these charts that we should dive into?
Yeah, so essentially we kind of did a synopsis, a brief one of the kind of collapse of Luna and then the overall kind of crypto market, just the liquidations that followed, as well as with Bitcoin. We also have kind of a variety of cyclical indicators that we use with the on-chain data that kind of quantifies hodler activity and overlays it with price to give just kind of a zoomed out view of where Bitcoin's trading. We have certain kind of metric valuations to objectively quantify whether Bitcoin's relatively cheap or expensive. And we also cover some of the derivative stuff to show you what institutional traders are doing and whether they're risk on, risk off. And so for the most part, Bitcoin's been somewhat in a bear market over the course of 2022, and Bitcoin has become an increasingly more attractive buy relative to what we follow. But we also cover some of the macro stuff where not so much this month, but last month, or I think 2 months back, we went in depth on the Russia-Ukraine conflict and some of the maybe second and third order effects that result or that will result from that. So we like to cover it all. We try to, at least. We don't get everything, that's for sure, but we do our best.
Yeah, no, it's an absolutely beautiful report as well. It's just diving into it. Crypto implosion, where you break down what happened in Luna, and then you just get in, to all of the nitty gritty with what's happening in the Bitcoin market. So, really a great resource for someone who doesn't want to spend time on Twitter and who doesn't want to spend all their time staying up to date. The monthly report and your weekly and daily emails, really fantastic. So really recommend it. Let's dive right in. I mean, Ansel, is there a chart that you are really interested in talking about, or what should we do next?
Well, I wanted to ask Dylan, is that the first chart that you showed there with the spot volume? Is that your highest signal chart, you think, or what on this report, this most recent report, what was the best chart that you got?
Yeah, I would say that's one of the bigger ones. I think just in terms of kind of a framework for evaluating whether it's a bottom or not, everyone wants to know. This is one of the kind of classic signs. I think also just in terms of our macro view, and this is not so much Bitcoin specific, but it relates to our underlying Bitcoin thesis, is the 10-year Treasury yield and the CPI. We've been covering kind of the bubble in the bond market, the everything bubble, for quite a while, and Bitcoin's obviously subject to that. But I think that's one of our favorites, number 7, as well as number 5, which is just kind of Bitcoin relative to its cost basis. That's it's a really, really great way of viewing the monetization of Bitcoin. So I would say I gave you 3 answers there, but those are probably my top 3.
All right, well, let's dive into number 7. Let's pull that one up, and can you talk us through this chart here?
Yeah, so here's the 10-year Treasury. The U.S. Treasury is basically the risk-free rate or benchmark that the global economic system, financial system is built upon. And CPI, the Consumer Price Index, this is showing the year-over-year inflation as measured by the CPI bucket. And obviously, there's this has been subject to change, but this, for better or worse, is what Wall Street and the financial system uses as that inflation rate. So what we've been covering in particular is how there's a few $100 trillion of assets that are being valued post 2020 with a negative real yield. And while the bond traders would tell that you can't use CPI, which is the trailing inflation rate, and you have to use forward inflation expectations for real yields. Well, that's fair, but I think there's also some signal or the reality that some of those forward inflation expectations are wrong. So what's happening, and the big problem that everyone has, even if they don't know it's a problem, is that when you have CPI inflation at 8%, or maybe even real inflation at 10, 15%, while your benchmark bond yield, your risk-free rate is giving you a 3% yield, there's a problem. And the problem is the cost of capital has been manipulated so long, and there's something is broken. And so our kind of thesis is, over the long term, even though Bitcoin on the shorter to medium term is subject to the ebbs and flows of the liquidity tide, over the long term, Bitcoin is an emergent monetary asset with a production cost that's programmed to increase forever. And so that's why we we focus on bonds and everything else, is we believe that the investor community has yet to kind of figure this out or wrap their head around it. And we kind of see this as the pool of capital that is going to need Bitcoin the most going forward.
Absolutely.
Yeah,
Sorry,
I wanted
ahead,
to jump in. I was going to say, a lot of times when I pitch Bitcoin, it's Bitcoin is money that works, and everything that we're using now just doesn't work, plain and simple. But it's interesting to think about it. It's like, Bitcoin is like a store of value that works, and it competes against bonds, it competes against real estate, it competes against fine art, gold, all the above. So really interesting to see how it stacks up specifically against bonds, which is right now you would say that's the conservative safe haven asset when you think about how most people split up their portfolio.
Yeah, and fixed income investors, not only because of the real yield, but especially when the long bond was trading below 100 basis points. Fixed income investors, bond investors have been killed because of the duration aspect of bonds, right? Because yields have risen, and that that principal value of those bonds goes down the further out they are on the curve. So, say you're a 30-year bond investor, yields go from 100 basis points to 300 basis points. The value of those bonds, mark to market, draw down a ton, and so that's kind of what we've seen. That's why we've also seen growth stock equities draw down in tandem as well, because of that duration aspect. And so while Bitcoin, interestingly enough, despite having no cash flow, despite having no coupon or no yield, has been treated as kind of this risk on long duration asset, we kind of think that's a short-sighted view of what's happening, and that it is a no duration asset, and actually is an optimal asset to hold in the face of unprecedented inflation and monetary debasement. But that's reversing, so we'll see.
Yeah, you bring up so many awesome points. The value of the bonds on your balance sheet, if you're banks, right, and you're holding a bunch of treasuries and they drop in value, now you're underwater. And so you can see how these typical credit cycles work, and what you need is a sound money underneath that to put a bottom in underneath the market, so the credit doesn't just collapse to nothing. So anyway, let's go on to chart number, or slide number 6. This is CPI again. Let's stick on this topic for one more chart. And this is, I like how you have year over year and month over month. So can you walk us through this? And then also, do you think CPI is peaking? We hear a lot of that out there in the financial press.
Yeah, I mean, I will say, I'll preface it with saying I'm not an oil trader. I despite following along as best I can, I'm not a geopolitical strategist. So I think it's, it might be just ill-advised for me to try to time the consumer price index rate of change, or whether it's peaking or not. But yeah, I think, when you are looking what the Fed's doing and what they're embarking upon, it's that inflation is becoming a political liability. It's, for the longest time, it nestled itself in asset markets, in the bond market, in equities and real estate. And now it's being felt by consumers who are looking at the gas pumps and seeing $5 a gallon, $6 a gallon, going to the grocery store and coming out with a bill that kind of blows their mind. And so in that sense, Powell and the Fed is trying to tamp it down, and whether their tools, their monetary policy tools, are the best way to do that is probably another discussion. But what they're trying to embark upon is reversing the wealth effect by stamping down asset prices and tightening monetary policy to reduce consumer demand and spending. And so I think looking at the CPI year over year, or the month over month, and seeing whether that's accelerating or decelerating can help you do that. But ultimately, there's so many variables at play. It might just be not worth your time to try to time it perfectly.
Yeah, I like the month over month. That's my new favorite measurement, because the year over year can hide so much from early on in that 12-month period. So month over month of the headline CPI in April was 0.3, which annualizes is only 3.6%. And if we have another low month like that this month, maybe another 0.3% print for the month over month change, then I think people are going to start looking like maybe CPI has peaked, and that could change the whole conversation with the Fed and tightening. So real quick before we jump onto the Bitcoin charts, what's your thought process on the Fed's hiking of interest rates, and will they pause, or monetary policy question here?
Yeah, I think really, while the Fed is jawboning, and while Powell is, kind of going up there and talking down or talking up the market, I think really the Treasury market has done most of the Fed's work for them. And obviously the Treasury market is swayed by what the Fed says, but the Fed's fund raise is at 75 bips, I believe, and the 10-year Treasury is at 3%. So even if the Fed hikes to 150 bips tomorrow, the Treasury market's already did that for them months ago. And so I really think that I hold the fundamental belief that with the debt levels that we have really around the world, the whole euro dollar system, but also just the federal debt to GDP and the deficits that probably will need to be run to win the next election, and the political promises that come with the fiat currency system, I think that there is no way that real yields can sustain to be positive. Kind of going back to that chart we showed with the 10-year Treasury and CPI, to erode these debt levels, going back to 2011, the IMF was writing about it. How do we erode the debt burden? It's financial repression, negative real yields. And so even if the Fed funds is at 300 bips, 350 bips, I believe that inflation will have to run over that for a sustained period of time. And because of that, fixed income in real terms, I believe has already experienced if you want to look at, say, the long bond, I think the long bond in real purchasing power terms has already topped, and that's kind of I think that will continue even if in nominal terms you're experiencing gains.
Dylan, I put out a tweet, I think it was yesterday or 2 days ago, saying that the Fed is killing the golden goose that they didn't actually know they had. I was kind of referring to this idea of like the fact that the Fed's only monetary policy tool is expectation management and effectively jawboning, as we have referred to it here. And by tightening so much and not realizing that the market is actually, pulling all the strings, that they're almost killing their own illusion, right? That there's this illusion that the Fed controls things, and by tightening, it's like they're going to expose that they're not actually in control. What do you think about that idea?
Yeah, that's a really interesting topic, and a lot of smart people that I follow and respect have said similar things, in the sense that they're just kind of like the wizard behind the curtain. And if you look at the Treasury market and you look at the Fed funds rate, oftentimes during hiking cycles or during loosening cycles, the Treasury goes below, like Treasury yields, are really leading the Fed funds rate and kind of bossing around what they'll do. This is what happened leading up to 2020. repo market kind of imploded. Fed funds the treasury market yields were already going down before they started cutting again. And so I think honestly, there's a possibility that if they do get what they want and kind of destroy demand and the wealth effect reverses so hard that we start to see a deflationary collapse, yields will start to drop dramatically. And this is just one of a few different scenarios that I could see happening, which will it'll stop hiking for the Fed. And really, it's just kind of it was always just an illusion, and it was monetary policy was never really at the whims of a few guys in ties, and it was always just about really where the market was going due to debt and demographics.
Ansel, do you want to jump in, or should we go to the next chart?
Yeah, let's go to the next chart.
All right, let's go to chart number 3. So if you listen to me for a long time, my favorite indicator is the 200-day moving average and the current price divided by that, commonly referred to as the Mayer multiple. You have a beautiful chart here, kind of teasing out where we are based on that. And it's interesting to think that, hey, we're overcooled, but theoretically, Bitcoin price could go lower, and the Mayer multiple will actually scale with that. And it just depends on how long it takes to go lower, since that 200-day moving average does get kind of, it moves along. What are your thoughts on the 200-day moving average and the Mayer multiple, Dylan?
Yeah, I mean, it's one of the simplest, but in that sense, it's one of the best. Bitcoin is a trending asset. There's a ton of momentum in the market. And so if you're just buying relative to its 200-day moving average, and not advising you sell Bitcoin, but when it's, deep in the red, overheated, oftentimes, it's showing that, hey, there's room for some downside, there's room for some consolidation, and vice versa, right? Like Bitcoin is trading at, 75% of its 200-day moving average. And throughout its history, that's like the 10th percentile of its low readings. And so the back tests there are obviously fantastic. Past performance is not indicative of future results, but if you are a value investor and you don't think this thing is going to die and go away forever, it looks like a pretty good time to buy. So in terms of our cyclical metrics, the Mayer multiple is one of the most simple, but it's one of our favorites.
How do you compare this oversold type of reading here on the Mayer multiple, and how do you combine that with maybe other things like the liquidations and with the Fed, the funding rates, because those other two aren't quite as I would say oversold as the Mayer multiple, right? So how do you kind of compare and contrast these?
Yeah, so the Mayer multiple, and obviously just by using a 200-day moving average, it's more of kind of a medium to longer term outlook, where derivatives are oftentimes shorter term, even though structurally they can remain kind of not irrational. But the way I think about derivatives is with spot Bitcoin, you can short the dollar, you can sell a dollar to buy Bitcoin and never cover your short, essentially, right? You can lock your Bitcoin in cold storage and never have to sell it back. But with derivatives, whether you go long with leverage, or even if it's just 1x, or you go short, you always have to get out of the trade. You always have to close your position. And so there are times when Bitcoin is very kind of susceptible to is over leveraged to the long side. Derivatives are leading the spot price, and there's a ton of kind of leverage built into the system. And there's times where derivatives are trading below the spot price, and that could be because of liquidations. That could be because of just trading and sentiment and kind of derivative traders, leverage traders trying to drive down the price of Bitcoin, which is like what we saw in the summer of 2021. And right now it's about neutral. So for that reason, over the shorter to medium term, I'm not really expecting like a huge liquidation event from a derivative standpoint. That doesn't mean spot price can't go lower because of legacy market conditions, or the VIX spikes to 60. Right? These are all things that the macro, the derivative landscape, the spot market, they're all somewhat intertwined. But for the most part, the Mayer multiple is something that I'm considering when I'm buying spot Bitcoin and locking it away. Not when I'm well, not personally, but if I was trading derivatives, I wouldn't, the Mayer multiple is not something that I would really consider all that much.
Cool. So let's combine those last two topics with the Fed monetary policy and these, kind of like market structure here. Is what's your anticipation for what Bitcoin does if the Fed continues hiking until they break something, or if the Fed actually pauses or pivots, which I don't think they'll pivot, but let's say they pause in July or September. What do you think the effect on Bitcoin will be?
Yeah, so obviously the equity market correlation has been strong throughout 2022. I think in terms of the spot capitulation, we've seen a lot of the HODL metrics that we look at, something as simple as like Bitcoin held over 1 year, right? That's not very advanced at all, but that's at an all-time high in absolute terms and percentage terms. And so we see exchange balances declining once again, not quite there, but almost at 3 to 4 year lows again, post kind of Luna event. So drawing down once more. There's really anybody that's kind of sold because of the Fed, or sold because of QT, or sold because of any of these kind of legacy market correlations, has likely already done so. Not saying that that price can't go lower, but these worries have been voiced for quite some time and aren't catching the market by surprise anymore. And so I'm not suggesting a decoupling happens tomorrow, but the events that have played out so far, the intense correlation that we have seen, and I think the kind of the neutral de-risk derivative market is kind of, this is what eventually leads to somewhat of a decoupling, right? And so obviously confidence was shaken a little bit in the crypto industry, if you want to call it that. Bitcoin's obviously different than crypto, as we think and believe, but eventually, this is where the seeds are sown for a decoupling event to happen. So certainly, correlation traders, everything else can drive day-to-day movements, but in terms of a significant decoupling from the NASDAQ, these are the conditions that we look for, and this is what kind of again sows the seeds for that event.
I want to get your opinion then on a chart that I think I tweeted this out just the other day, maybe last week, where I looked at the pivot from January 2019, where Powell paused and then reversed, and that oh God, I lost it now. It had to do with rates, but I lost it. Well, if you look back at that time, like you said, rates do precede down before the Fed pivots. And we're kind of seeing that a little bit too. You mentioned the 10-year and the 30-year, but if you look even a little bit shorter to the 2-year, the 2-year sitting about 2.5%, 2.6%. And if they will get there in 2 hikes, right? They'll be at 2.5% in 2 more 50 basis point hikes, right? So I don't know if the 2-year does start coming down and the Fed funds is going aggressively higher. I mean, that differential that spread could close very quickly. Can you maybe speak about that a little bit?
Yeah, I mean, I certainly follow the treasury market pretty closely. Not a bond trading expert, although I'd like to claim to be, but I am not. I think it comes down to the deceleration or acceleration of CPI, like we were talking about earlier. No one really knows what to expect, although there are inflation expectations you can watch. The price of oil, right? Like we're kind of at the whims of OPEC, whatever Putin really says. He's obviously got Europe in a really tough situation. And so there's so many factors at play that I think can affect the bond market. But in terms of a structural sense, I like to look at this multi-decade, 40-year-long secular trend of interest rates. And there's a great 10-year chart. Some people call it the chart of truth. And we're already kind of above that breaking point where yields really can't materially go much higher without kind of breaking things. Even if again, real yields are deeply negative in nominal terms. It's not something that this historically over-indebted economy can handle for too long. And so that eventually leads to these deflationary impulses where everybody rushes back to the treasury market. And so, in terms of the short end of the curve, the long end of the curve, not sure how high it can go. I certainly think it could go higher, and I wouldn't be in bonds for anything more than, especially the long bond, for anything more than a trade at this moment. I still think they bleed value over the long term, but certainly, closer to a top than they were with, 6 months ago, or a bottom, I'm sorry.
All right, let's go to this other chart that was one of my favorites here from the recent report. And this is the slide number 4, the Bitcoin price weighted by reserve risk. Can you walk us through this one? Because it's also looking like it's at relatively historic oversold conditions, right?
Yeah. So reserve risk is one of our favorite indicators, and we've explained it in depth in one of our pieces. I think it's going back in the fall, but essentially reserve risk, it packs a ton of data and info into one chart. So it essentially, it weighs the incentive to sell price by what's called HODL bank, but HODL bank really is kind of the cumulative opportunity cost foregone by hodlers. Okay, so let me say that again, slower. Essentially, it takes a whole bunch of metrics in, weights coin days, it weights basically how long you've held Bitcoin, all Bitcoin throughout history, and it comes up with a cumulative opportunity cost. How convicted are the hodlers? So it basically weights hodler conviction, whether that's strong or weak, and with price. And so times where reserve risk is very, very high are times when hodler conviction is very low. When hodlers are spending, they're dumping their coins. A lot of coins are changing hands. At the same time, that price is very high. Not a great time to buy Bitcoin, even though some will say it's always a great time. At bottoms, reserve risk is showing that price is very low at the same time that hodler conviction is very high or increasing. And so, explaining the technicalities of this indicator over it is, we won't do it justice. There's a ton of data that goes into it, and we've actually backwards computed it to better understand it. But we really love it as one of the cyclical indicators because it just packs so much data and info into one simple metric. And by all means, it's very, very oversold. And historically, based on what we've seen, I think this will be looked at as a fantastic time to buy.
Yeah, it looks like it hasn't been this low since the COVID sell-off back in March of 2020. And I don't know. I think it looks like it might be able to continue to stay low at that point. But if you look up and compare it to the price can just creep northward and start the next bull market, even while it stays low in the green there for a while.
Yeah, certainly. And the interesting thing about this indicator is that price can move up, and the indicator can stay flat or even go down as that kind of hodler conviction, as calculated by this metric, increases. So if kind of cumulative hodling is increasing and strengthening, this indicator can stay low for quite a while and signaling that it's still a value buy. So there's no one metric that anybody should kind of gauge all their decisions off of or base all their decisions off of. But certainly something like this can weigh into your decision whether it's a great time to buy or not. And by all means, it is.
This is a really cool metric. I really like very, very simple metric that pack a lot of information. That's why I like the Mayer multiple. Kind of tells you what the price has been over the last 200 days and then how the current price compares to it. I like how this compares what are the long-term UTXOs doing? What are the old UTXOs doing? And you've seen old UTXOs moving at cyclical tops. Like that is a very, very common thing. And, that chart beautifully illustrates that. So really cool. And while it kind of seems fancy, it's actually a pretty simple metric as well. So I love simple metrics that pack a lot of information. So that's an awesome, awesome metric.
Yeah, I think if we want to go to number 5 on the slide deck, this is probably my favorite one, my favorite on-chain metric to describe, as well as just to look at it. I think if you strip away like all the noise, you'll often hear that Bitcoin is far too volatile to work as a currency or to work as a monetary asset. But one of the coolest things is that because of the transparency of this network, we can see when every single Bitcoin has ever moved, when it was mined. And we can also, overlay that with the price to come up with what we call realized value or realized price. And so I think maybe easier to understand is realized market cap, which is just the price of every Bitcoin it was last moved, aggregated. So realized price would just be that divided by circulating supply, and we can kind of come up with an average price of all Bitcoin that's ever moved. And so historically, that's much, much less volatile and draws down much, much less than Bitcoin does. And when Bitcoin's price actually goes below this level, so currently it was like $24,000. That's been, the bottom or close to the bottom of a bear market. That's kind of signaled somewhat of a capitulation event. So does that happen again? Is it guaranteed to happen again? It's absolutely not guaranteed, but you just using this kind of like simple average cost basis framework, we can see, when the network average, when everybody is underwater. And so on average. And so I think it's a really cool thing. The market value to realized value ratio kind of really shows, like, I like to call them like monetization bubbles. You can kind of see like the 4-year cycle encapsulated in this simple ratio of the price to the realized price. And so, again, no metric is the do all end all, but just in terms of evaluating Bitcoin's rise, evaluating Bitcoin's monetization, this is one of the favorite and the most transparent.
Yeah, I think this is fascinating. And I noticed something on this chart as well as on many of the other ones, like the Mayer multiple and stuff. The peaks seem to be getting lower, and so do the troughs seem to be getting higher. So this is going to lead into my cycle thing. You said a monetization bubbles. What's your take now? I think we talked about this multiple times in the past on your past appearances, but has your idea about cycles, has that solidified or changed recently?
I think a little bit. We're obviously more at the whims of macroeconomic, the macroeconomic liquidity tides than ever. But I think, and I really don't think that halving is the leading driver of these cycles anymore. But in terms of the velocity of these cycles, or just how fast Bitcoin appreciates, obviously at $1 trillion or $500 billion asset, it's much harder to appreciate by an order of magnitude or two. And so, it certainly makes sense that the peaks are a little bit lower in some of these ratios and like cyclical market measures. I think the NVRVZ score, so if you standardize this data, it kind of eliminates some of that, and it looks like a better chart. But that's a different topic. But yeah, I think that it makes sense, and it's kind of a natural progression that even though Bitcoin's still volatile, it's less volatile to the upside and the downside during these kind of phases. And I think that's actually pretty healthy. If Bitcoin doesn't draw down by 85% every few years, in terms of overall adoption, that's probably a good thing.
Well, my only take on this is it might be getting less volatile, but as soon as it seems like it's not going to be volatile, I think that's when the volatility really, really goes up, because at some point, a lot of value needs to be convinced to transfer over to Bitcoin, and we have no idea what that's going to look like, but I know for a fact it's going to be volatile.
Agreed.
All right, I think.
Go for it. Sorry.
I was just gonna say, I think we covered all the charts here. Other stories I have, or do you have any other comments on your newsletter or the charts? And then I wanted to maybe pick your brain about the upcoming Loomis proposal in the Senate.
Nope, nothing on the report. Fire away.
Okay, so what have you had a chance to look at the proposal? I know these guys here on the stream, they just talked to Caitlin Long for about an hour, and it was awesome. I mean, she is the expert in this field. But what are your thoughts? How will a kind of a regulation or a regulatory framework around Bitcoin, how will that affect macro? Maybe are there any implications that you would see or that kind of pop out to you?
Yeah, I honestly, to be completely honest, I haven't looked at it in depth other than kind of the headlines this morning. So I think I'd be doing it, an injustice to comment on it after Caitlin Long just, probably dished out some wisdom over the hour prior to my appearance. But is there anything from your end that you found particularly notable?
Well, yeah, I mean, they have things in there about making Bitcoin obviously under the CFTC as a commodity instead of making all crypto assets or digital assets, they call it in the proposal. All digital assets would be under the CFTC unless otherwise determined by the SEC. So I think that this could put like a Bitcoin spot ETF maybe a little bit more likely. And I think it's good for Bitcoin, but I disliked that they lumped in these ancillary assets, they called them, in with Bitcoin, and made them kind of seem default commodities unless proven otherwise. So that was kind of my takeaway. But of course, this is year or two away from becoming law, but it is the first step in a framework. And I think it's really important because I do think the US is going to lead the way in a regulatory friendly way. And so I think this is the first step along that.
Does Ethereum pass the Howey test?
Technically, no, but according to this, because there was a write-up on Bitcoin Magazine this morning, and they said that Bitcoin and Ethereum were guaranteed to be commodities, and I thought that was kind of crazy. But yeah,
it is insane to me that they keep including Ethereum. And again, I'm not a lawyer, but it seems so clear that there was a event that violated U.S. law, just cut and dry. And what has happened since? My take so far is that altcoins are DDoS on the reputation and the capabilities of these enforcement agencies. And for them, we can look at it like, oh wow, how could they let Ethereum through? But for me, what I see is there's cracks, and there's going to be more cracks. And I, just how much fraud happened during the ICO stage and what is being unveiled now with this most recent run up. They just can't enforce on it quickly enough, right? I do think it's interesting. Hey, default commodities, unless otherwise stated, I feel like that gives an advantage towards people spinning up altcoins, but it also shows nuance in that, hey, if something is a kind of digital commodity, it shouldn't be treated like a security, but a lot of these things are securities and will be regulated by the appropriate institution. I like that it doesn't create a brand new regulatory body that puts them all in the basket. Like, I think that what this is doing, it shows understanding in a much deeper way, I think.
Is Luna 2.0 a commodity or what?
You're asking the good question, so I don't know. I don't know.
And
that's
Ethereum,
that's for the SEC to determine, right?
Ethereum pre-merge or post-merge, which one is the commodity?
Yeah.
I have a question or an idea to present to all of you, because finally someone sides with me. Thank you, Ansel. There's a caveat to this that I really don't like, which says that if you are deemed a security, you can, in essence, send forms or applications twice a year to the SEC saying that you are in compliance to remove the label of security off of your offering. So I personally think this is a really messy, poorly designed bill. I think Lummis caved too much. This is not my show, though, and I'm going to stop talking, but I wanted to throw that little caveat in there, that there is literally an exit hatch. Even if you're deemed a security, it's like, oh, wait, but don't worry, guys, we got you covered.
Yeah, I think the default position is this ancillary asset. And so it's not really a commodity, but it'll be treated like a commodity according to the SEC. And then the SEC can come back and kind of claw back those worst offenders, if you will. I don't like that either. And that's kind of like creating a new category just for all these altcoins. And like Christian said, he was glad that there isn't a new agency, but now it's almost like a new category between a commodity and a security, when all of these things should be securities, except for Bitcoin should be the only real commodity out there.
Yeah, I mean, I'm not one to wish imprisonment or law enforcement to clamp down on anyone in particular. I would say I'm more of an anarchist than not, but at the same time, the SEC is completely over their head. They're going after, someone that made 20K working at OpenSea, flipping some JPEGs, while a $60 billion Ponzi scheme just imploded, listed by US exchanges, right? So they're way over their head. And I agree with CK that there's just way too much that they can, that they can't address. There's just too much.
again, like the end game to this is like the way we regulate things is going to completely change. The capability to regulate is going to completely change. And this like idea that you can regulate these things with the SEC or with securities and put them on regulated exchanges, like that is going to get obliterated by just the sheer number of bullshit, right? They just can't. It's like too easy to crush them that they just can't stack up against it. They can't man these agencies and operate efficiently enough to actually prevent it from happening. And what you're seeing is, the longer that these agencies are shown to be incompetent, that's where the politics come in, and then they're forced to bend the knee even further with this other stuff. So what we're seeing right now, my interpretation is we're seeing the takedown of these regulatory agencies slowly, right? Their power is being exposed, just like the Fed is being exposed. They just can't deal with it. And the more that they try to squirm and enforce, the less credibility you have. Never once has the SEC gotten so many complaints about a product, right, as they are about the Bitcoin ETF. Like that's another DDoS that's happened, right? So, they just can't win. Their structure it won't scale into the future, and we're seeing that on multiple angles.
Well, they can win if they just say Bitcoin only. Bitcoin's only asset. Everything else is unregistered security, and we're going to enforce that. I mean, that's the line they'll eventually have to draw, right? Because yeah, you're right. If they don't draw a line, they're just going to be DDoSed to not irrelevance, which I guess could happen. But
that's the path. I'm just saying that's the path.
But I think they'll choose.
Could the Fed fix their woes? Maybe. The Fed embrace Bitcoin. I don't think the incentives lead that way.
Well, if it's between being irrelevant and choosing Bitcoin only, I think they'll choose Bitcoin only. But anyway, this was a great show. Dylan, thanks for coming on, man. Should we wrap this, CK?
Yeah, no, Dylan, we have to educate this audience. What do they need to know about Bitcoin Magazine Pro? What are you doing? I know you have some open recs out too. So maybe talk about some of the roles that you're looking for.
Yeah, Bitcoin Magazine Pro, we cover all things regarding the Bitcoin market, like we talked about: macro, on-chain, derivatives, Bitcoin mining, treasury yields, legacy market volatility, everything in between. You can find the publication at bitcoinmagazinepro.com. We publish on Substack 4 to 5 times a week. We are looking, in terms of roles, we are looking for a product manager, as well as an analyst / manager of a new paid tier where we're actively managing capital. So if you have interest in either of those, you can go to Bitcoiner jobs where they're listed, I believe.
Yep. So we got some jobs, some really cool jobs, and you would get to work with Dylan and Sam, who appear on this show frequently. Maybe you could appear on this show as well into the future. So join the Bitcoin Magazine team. Subscribe to Bitcoin Magazine Pro. You got a little taste of all the awesome information that these guys jam into their content. And I'll like to plug them in again. Tomorrow, Dylan and Sam are jumping on to continue talking about the Bitcoin markets. That will be available on YouTube as well as on Spaces. So a lot of good stuff coming out here. And Dylan, where can people Q, what do you need to say?
I want to highlight the most recent BM Pro issue where the dynamic duo of Dylan and Sam just ripped apart Bitcoin v crypto. Highly recommend. I'm going to be forcing them to go into those charts that they shared with us. So you're not going to want to miss that.
That's going to be up. Dylan, where can people follow you on Twitter?
At Dylan Leclerc _. I'm there. Just find me. Just chilling, interacting. You can DM me if you have any comments, questions, concerns.
Watch out for the fakes. Dylan will never ask for your sats or ask how your trading is going. Ansel,
that is true.
Where can people find you?
At Bitcoin and Markets. I do a weekly newsletter every week on Friday, and it covers close to the same thing over there that Dylan is covering, except mine I think is a little bit more I guess long form than his is a little bit more chart heavy and data heavy. But bitcoinandmarkets.com, and you can follow me on Twitter at Ansel Lindner.
All right, give Ansel a follow. Give me a follow at CK_Snarks. This is really the only content I do is on this show with these guys, but it's always a good time. And I'm going to send it back to you, Q.
Also catch CK Snark in like an hour and a half in Twitter Spaces talking to Nathaniel Harmon and a really awesome group about sustainable Bitcoin mining. So CK's a liar. Make sure you also follow him on Twitter.
Yes, CK_Snarks. And I forgot about that, but I actually have to prep for it. So that's going to be going live on Twitter. And we also record it. So Bitcoin Spaces Live, you can find all of our spaces on podcast. That's enough shilling from me. Guys, I'm handing it back to the team.
Thank you to the FedWatch team for joining us. We're going to keep this smooth, simple. Use promo code FOMO. Get 10% off of everything at the Bitcoin Magazine store, including the Moon Mag or this lovely Bitcoin 22 hat. Limited supplies left, and we do also have a new magazine coming very, very soon. I believe it's being sent shortly to print. We're just waiting for one last article to come in. CK, finish your homework already. But in all seriousness, be sure to grab a subscription if you're not already subscribed to the print mag. I can't keep my job if you guys don't buy tickets to Bitcoin 2023. So like, buy tickets to Bitcoin 2023. Did I do all of my, Bitcoin Day, Charlotte, right? Saturday? Bitcoin Day, Charlotte. If you're in the area, make sure you go down, catch our producer, Chris, who's going to be hosting a panel out there, as well as a couple other Bitcoin Magazine team members who will be speaking. Be sure to check it out if you're in the area. Did I talk about everything that pays the bills? Talked about it all? All right, guys. Come out, hang out with us tomorrow. We're going to have Bitcoin Gandalf and, of course, Dylan Sanford, Bitcoin Magazine Pro. Stay humble. Stack sats.
Talk to you tomorrow.